So there we go. We've got a green zone and a red zone basically with a VWAP at the top of the range. So what's interesting about this area is it's suggestive that, the average price is higher than the entire range itself. So Amazon's still hovering around that same trend break area, potentially making that right shoulder retest environment. See, it's at its POC, and many people that that head and shoulders that could be visible on the Nasdaq isn't really that visible on uh, stocks like Meta or Amazon. But instead, Meta has something else going on entirely, an inverse head and shoulders, many would consider. So, if they continue to have the same kind of influence that they've had over the past couple of days, Amazon and Meta are both positioned differently than the Nasdaq, because on the Nasdaq there is no sign of an inverse head and shoulders whatsoever. Oh, today is also Intel. Um, that's another one. They're obviously not as important. There's a few other ones that are gonna release as well, like Enphase Energy, Chipotle Mexican Grill, Ford, um, United States Steel, Texas Roadhouse. Not any huge companies like Amazon, but that is going to be the big one of the day. And just to be clear, Amazon happens exactly at the close, as well as Intel. The two biggest ones happen exactly at the close. A few other ones, like Columbia Sportswear and ANPR, and a lot of significant ones. Also got Skechers and Capital One, Boston Beer Company. And of course, nothing on Friday, and that's normal. There was a pattern that was similar to what we have here now. Yes. Almost like it had a problem making right shoulders. Like even here, left shoulder to the head, the right shoulder, small. Notorious for coming back to where the shoulder used to be when it doesn't make it. So we gotta watch out for that. So it's like, I already remember talking about this making a head and shoulders but badly positioned. Now you can see that like it didn't make a right shoulder, went through it, but coming back to where the shoulder could have formed, or like when I was showing you on yesterday's movement how it was crappy, but it ultimately came back to the crappy area. So that's oh sorry, here is the idea. Basically I find a lot of similarities in what we were doing here to what we're doing right now. Take a look at both of them. But the idea that it started with a pop up and then led to a new high, came down and just had like a little crappy right shoulder and then carried on even farther through the low and neckline. But ultimately the value of the trend break is to get it back into that middle area, making it like an equilibrium. So we have to watch out for that. And of course it can't get back to the equilibrium until it breaks the trend, so it becomes a very intriguing level. Also, I just want to point out that we came from the 1, 2, and 3. Came back to the first of the 3. So 3 consecutive lows. Low, lower low, and even lower low. And the even lower low brought it back to the first of all of the lows. And then, I mean, sometimes that's all it gives, right? So, ironically, it's the same case for this one here, too. It was a low with a lower low and an even lower low. And it managed to get back to it every single time. It makes a third low. First of the 3 is really something of a consideration. One thing that can really make that happen is the distance between the 3 lows being somewhat similar. But when it comes right back like that, it shows that it's trying to get people out. It's a little bit more of a dangerous environment. So it's good, but buy the first of the 3 to make sure that you've taken off enough. Like if I'm ever trading a 3 drives pattern, I like to make sure that I have orders placed on the first of the 3 just in case it snaps there to take off enough to secure the trade. Because then you're not fighting for the bid or the ask or whatnot. If you've got a limit order at that level and it hits it, you're filled. You don't have to worry about, getting filled at the bid or the ask. If it hits that B point, you've got your order in there before everyone else's. Very grindy at the green zone. Of course, on the other chart, we're also right on the support. This channel, again, breaking up above that could involve the yellow line though, so we have to be careful with that. Changing things, getting on top of it, using it as support. It is going to be increasingly difficult to be involved with this for a long period of time. Yeah, I like the idea of returning to where the left shoulder was, so roughly the POC. It'll look like a head and shoulders by that point, but it doesn't have to work. It can form, however, but in forming, it'll be getting close to the yellow line. Oh yeah, it kind of did that sideways down and then up here. This is a kind of consolidation that reminds me of something that could have a spike out of the bottom of it or reversing, like we did here. And it would be a pattern very similar to how it began. And I wonder if it makes it again, if it creates the confines of the new channel. So like if we did this move and it made the channel, we do that move and make a new channel instead of making it like this. Comes an interesting idea. As we break down into the spike, we create a new trend. Put some fibs on this major move here. One thing that I question, this move here, right? It went to a 161, right? I think.
188 almost.
Well, yeah, I guess, but this one here, it could do a 161 as well.
Okay.
Like I think that what
Equal
we're
sides, you mean?
exactly.
Okay.
This move here, it's not that it doubled, but it did a 161, and this one's also doing a 161 right now, so very controversial. I think there's also a blue line right here, so it's trying to get back to that. I don't think it's gonna be okay. So this big one, I'm gonna make it dark, just like I did yesterday, and we had that like dark one it was using the whole day, right? This one's kind of different, so curious about that. And I'm curious about Amazon. Did it hit its B point yet? Yeah. Amazon hit its B point, and it's left with a new trend. But it is right in the middle, so anything Amazon does might be still chop.
It still has lots of room to go down. It's not even in the yellow yet on the volume node.
Yeah, exactly. But
What?
there's nothing saying it has to go down though. But it's like
Well, if you're gonna buy it, you don't want to be buying it
no,
at the
no,
bottom.
no, no. You don't want to buy it, but like it's in the middle. So like I say, there's a lot
Well,
of
it's
maybes
in
in the
that
middle.
188, right? 200.
Out to
Like,
the bit original. Yeah.
yeah.
So I mean, there's some things going for it, but I mean, it's better to observe situations like that than to get involved with them. Like if the Nasdaq was positioned like that, it wouldn't be as attractive. But I mean, the Nasdaq could pull Amazon up. Like it's literally like that right now. Like, cause if Amazon was positioned like the market, I'd say it could pull the market up. So, and if it was reversed, and it's like today is the day, like it's Amazon's day basically. All eyes on Amazon. Okay. Interesting how the 181, sorry, 161 worked.
Yeah, I like that.
Yeah. Yeah, cause
Calling it out before it even went up like that, so that's good.
mhm.
Equal portions on 90%. So.
Yeah,
Yeah,
exactly.
I definitely would have never put that fib in there unless you showed it to me.
No, because it's really weird. Nobody would draw it like that. But I'm like, I see this all the time. You want to know why I do that? Because this. Oh shit, not Facebook. It's Meta. The idea that we wanted to see equal portions on either side of a diagonal move, and then it went and it did exactly equal portions. Like this is what it really wanted us to see, that it did that. And I mean, it carried on. It's still doing it. So I'm like, the idea that it was supposed to double was pretty sound in my opinion. Just because it went down, it just offered more. Uh, because like I remember saying like it's definitely going to go back up and so on. And I mean, it moved a lot more than the Nasdaq did, of course, but Amazon could make the market move like how Facebook did yesterday. So I'm looking forward to that. And what are they even expecting with Amazon? Because sometimes when they expect so much, it can create volatility when they don't get what they want. And it's interesting if they expect it to be bad, that would be good, I think, because if it is good when everyone expects it to be bad, it creates a surprise. Or if everyone expects it to be good and it's bad, that's a surprise. So it can create volatility. It creates fear. So and it's good to be able to you know to be able to talk about that in a way that's not threatening. Like most individuals would cling on to the fear and also feel fear, but that's not a good thing to do. I mean, how's that productive at all, right? But it's human. So I mean, good to have an introspective look, because if I, not to say that I never did that when I was first learning, because people are pretty convincing, right? You read a news article, you think the world's falling apart, you think it'll never be the same again, and then next year goes by, next decade goes by, it's all the same. It's like, the events really, they matter from time to time, but really at the end of the day, a lot of them just end up right back where they started. And unless it's something that involves, something really like right out there, but most of these events that we hear about are just like journalists trying to make us excited enough to keep reading. So, and that's dangerous. I mean, it's not an effective society when we do stuff like that. But that's okay, I guess. At the end of the day, we're doing the same thing that we did on Facebook, except from a horizontal platform, which is easier. Undeniably, when things are on a flat horizontal mean, so much easier than when things are trying to be even around like this move right here happened around a diagonal level. You have to consider so much more there. And like, you know, when we made this spike on the top of the blue line, we made it on the bottom of the blue line, and then it could go get the targets, which it, only got some of. So, and I love that too. When it only gets some of the targets, it means now when you have exposure to such a small move, just like this one, um, you could get that target with just a little bit left. Obviously you could take off some contracts to make sure that it's safe, have some at the, that's not a B point anymore, but still, hey, that's actually not a bad spot. Like I could leave that there and it would be fine. Technically there's one here, so be aware of that. Hitting that level means that we've essentially come back to the equilibrium. Um, like basically like this is our area in the middle, and we've made a spike out of either side, same size. What's interesting to me is it's not really the same size as the middle spike, and there's not really the same amount of volume that there is on the top and the bottom. Um, wow, this undeniably been hell of an expansion. Does it want to continue doing that, you think? I highly doubt it, to be honest. Done a very good job at going high into new low, even higher high, even lower low, even higher high, even lower low. And but sometimes it messes it up and doesn't go all the way. But hey, it ultimately keeps the same shape though. And then it just continues to expand, which is the design of the pattern, and continued to even expand beyond that. Now, one thing that's interesting as I draw that in there, I'm like, well, it clearly had an original triangle. And I can't help but notice that the expansion that it made recently beyond those original lows is very similar to what we had on the top side. Let me look at it here. Not exactly, but one thing that I find similar about those two components is that everything that it's done away from it managed to come back, and it started out with a move like this before it went on to do this big one, as it did here. EOC and the VWAP are roughly same area. question becomes, when we see it a 161, is it because it's already done one? It's like, well, it could be, and it's like it's a matter of, do we find value in checking? That's the lesson of that, I guess, is we got to check for that. If it's obviously happening so particularly, so clearly, and it spends all of its time making sure that it's doing that right, well, first step is understanding it, and the next step is finding out where we can be, how we can position ourselves for the greatest effect inside of this motion, I suppose you could say. But the one thing it has not done yet that I do believe it will do is come back to where the left shoulder was, the POC. Basically, there have been like head and shoulders to inverse head and shoulders that have looked really strange lately. Like we've done this before. Like high, higher, high, lower, high, low, lower, low, higher, low. That's you know something we could really get involved with here. If it carried on to do that, I mean, same thing. Exactly the same thing. Not exactly, but same components. So what's the value of being exposed? What it means is getting the downtrend to have a negative response could be on the table. Up and then down. What that'll look like is this crappier version of what we did in here. We were looking at that, not gonna lie. And I mentioned it could begin how it ends, or it could end how it begins. You know what I mean? Basically. The motion that started the trend is the one that ends it. In this case, it's formulating before our eyes. Another thing as well, I didn't consider it, but I just noticed now this is like an orange line. Well, orange used to be red yellow, so this line used to be a red yellow. It came back to test that line as well, which is like in retrospect, if we go out to like a 15-minute, we're gonna see that it like tested some other really important major long-term downtrend line that broke already. And I'm like, okay, that's that's fine. But it is the case now that we've managed to take this move, fire it out the top by a 161, and we've managed to do it the same at the bottom. My scribble doesn't look accurate, but it managed to pull that off. Oh yeah, the other chart, NASDAQ. This spike is what we had here. That turned up a little bit. Could be the case that it's like a green zone and a red zone. Curious about that. So like I can see that out of the entire trend since the very beginning, we've reverted back to the view app of it. That is a common move. I find it's incredibly common for it to struggle at that particular view app. Like if I just put one on here as well, when we were down here, I think that it got to that level when we pulled it when we pushed it up, it kind of skewed it a bit, but that's fine. I mean, what this could be, right, is a second version of what we've done here. This part right here could be what we're doing right now. After all, it is roughly the same size. It's like I can see that in the triangle that there's two components that are here. Ah, interesting. The two tests equal distance apart on either side of that level. Usually I got a gold bar in there. That distance is actually pretty important. It happens a lot. It ends a lot of different moves. The amount of consolidation time that we can have, the amount of time that a spike can take, the reversal territory, the average size of a consolidation. It's like even when it's not exactly the same highs, it's like in this case, that high and this area, they're both related. And that was the time that it took to make the two last highs, the time that it took to make the two lows. And we can continuously see that over and over again because the institutions are counting on that people will not recognize it. That's the part. Or else we would see it change as soon as the people started to impede its ability to play out by trying to be part of it. So we can see that happen a lot more, and we can expect that people will not catch on. Not for a while at least. What we're doing right now is very much like a retest of a broken trend. Might actually be from here. Like it's trying. Now of course, undeniably it has created a new trend. This VWAP starts to lose major importance next time we hit it. Subject to breaking it, potentially. Well, actually, more of a grind the next time we hit it, then we break it.
I feel like I'm not seeing the chart super clearly today.
How do you mean?
I think I'm just having one of those days, that's all.
I mean, I haven't taken anything in a while. It's not like there's something really standing out.
That bottom there was a 188 200 to that short term. Yep.
Well,
It broke out there.
the last thing that I saw was the 161 on this chart right here
Yep. And that was also a 188 short term.
of this low.
Yep. And this particular move here, the 1 minute hit the 15, and it just went past the 61 on the retracement. The short
Yeah,
term.
61 here.
Yeah, yeah. Yep. Tell you, I'd be screwed without the RSI. It really gives me sort of location. Even the two, even the low here, the 1 minute was down the bottom there. The 1 minute RSI.
Yeah, I mean, for me, I get so
Those things
compelled.
oscilles, right?
Yeah, I get compelled to take the trade, and I forget to even look at it sometimes. But I'm trying to remember to look at it. But if I know it's gonna move, all I can focus on is being in. They don't try to find even more confluence when I have enough confluence. I
Yeah, yeah,
get a lot of confluence out of the way the candlesticks move as well. There should be more indicators that represent how the candlesticks have moved in the past. The speed of the candlestick change, for instance, is not represented
yeah.
in the past. But I think it's really important to watch the active movement of the candles and when they're moving fast or slow, or like this is a consolidation where people really aren't meant to start to try and find like incredible high probability trades in here. I've been like cringing my ass off the entire time I've been in this consolidation. The thing that it's decided to do was something that wasn't it was abstract, like completely abstract. I watched like a lot of the moves on the market, and I can see that this kind of movement, to place a fib a completely different way, a lot of people will be wondering why it reversed at the 127. You know what I mean? So it's like,
What's that 127?
oh, to the big move right here?
Oh, okay. Well, that's the thing, Maybe it's just early on. Maybe it's going to go down lower.
Yeah, it totally
Because
can.
the bottom. Because I like to use short-term fibs too, right? I mean, if it goes down quite a bit, I'll look at the larger term, long-term fibs. But something always normally comes off the 180, 200, or it's coming off the 261. That's your higher probability plays.
Yep. Well, the thing that's like,
So find them,
the thing that I see about this environment that's like a matter of fact that I can see is, it started out with this environment here being the middle centralized area, and then it decided to go up out of it, and then the big down. So it'll have a lot of people, bearish about that, but this is actually a bullish pattern. It always makes a downtrend. And unless, if it was so bearish, then we would still be in the last downtrend that this pattern formed because it wouldn't have broken yet because it's so bearish. So at the end of the day, the downtrend always breaks, and when it does, it goes up. So the last thing for this pattern to do is to end by going up, which is interesting because just like a falling wedge, the majority of the movement that we get in a falling wedge is downwards movement. And just like an M, which is a bullish pattern, ends at a low, you buy at the bottom when it's went down. The biggest move of the entire pattern that influences people to buy is a downwards move. So it's interesting. And the biggest part of sideways up and then down is that everybody gets to see like 80% of the day is a downwards move, and it creates the equilibrium here, and it ends up coming back to the middle of it on the break of the downtrend. And in this case, we can see that it's come from the middle, it went up through the top, down, and then returned back to where it began from in a motion like this. Very, very short term. It's like it made a little bit of a head and shoulders to an inverse, but what's funny about that is originally it made that at the beginning of the day, and it did it backwards. It was like the left shoulder, the head, and then the right shoulder. The last thing to form was a low with a lower low and a higher low in reverse. So if you look at that, it's exactly the same, this pattern, except in reverse, because we've got that low, lower low, higher low, and then high, higher low. So you got the three, the head sticking out of the bottom, and so forth. And then in this case, just like what we have there, it started off as an inverse, and the last thing to happen was a head and shoulders, and it came down to that inverse and ended up falling through, which is just like deja vu here. The head and shoulders came down to that inverse right shoulder, and it ended up falling through the lows. But everything is about anticipation today for the earnings report at the close. So, like many other earnings reports, it's grindy and choppy, or either that or running like crazy up until the report. We haven't had much anticipation moves upwards at the end of the day lately. But the beginning of this day has been in a downtrend, and breaking that day or breaking that around the midday should be pretty normal, I think, in today's environment. New B points have been made, and Amazon will be a little bit lower now too. B points, roughly at the 61. Good to have an idea. But yeah, for me, there's nothing that can make me say that there's a bad day. I get really uncomfortable, and if I'm out of control, like I focus harder, I work harder, I make sure that I do not end the day without like with confusion. Like I always end the day with understanding, or I do not stop. Like that's the only way that I can keep control and have control and remain at the level that I'm satisfied with. That is the case. But quit is not in my vocabulary, that's for sure. But I study harder and I have to work harder. And this area is not attractive, so it's not like that idea of being here and then not having to do something. It's like it's all about being safe at the end of the day. And you know, for what B points there have been, every single one has been taken off, except for this one up top. But there was one that was right below it that offered way a lot of profit. So plus the VWAP there too. So. And I also look at this and I'm like, well, what we did is we had a sideways movement, an upwards movement to a 161, a downwards movement to a 161. What if we take this original movement, the whole thing, and do a 161 of it? Will it make a 161 on the other side and continue to expand like we've been seeing? Because expanding has been on the table 100%. So it's definitely something to think about. Another good thing to think about when we're confronted with thoughts of bad days is everything ends, or else we'd still be in the last thing that didn't end. Every single thing does come to an end. Every single environment, every single chop, every single thing we don't like about it, all comes to an end with time. And everything will change today, guaranteed, on the report. Like if it wanted to be absolutely dead until the report, it could do that, and I would understand why. It's not like I'm going to be hoping for it to do something else. If it did literally that 5 point range the whole way, till here, I don't think it's going to do that. I think these trends are going to break before we get to this time. And does that mean that we start from the middle? Does it mean that we can be positioned for the earnings reports before they happen? I'll tell you one thing right now. If we were to run to this line, we probably wouldn't break it. So some sort of chop is almost necessary. So I'm like, if I understand that it's necessary, I'm not going to be hoping for it to do something else while it's necessary for it to chop. Right? Which is very black and white to me, how to, the thought process of how to go about that. And it's either neutral or positive mindset on it always. Like because like I say, I think the confusion does bring negativity in a strange way as well. Like it's hard to feel positive about confusion. And I never thought about that before, but it's true. And it's just one more reason to eliminate it, not to avoid it though, because that's another major thing. It's like when things aren't good, It's like it's good to position ourselves in a way that says we're being patient rather than in a way that says that we're confused about the situation. Because if we know what we do want, then we can wait for it. But if we're waiting for something that we don't understand, and then trying to make sense of it, uh, opium could be involved, and that's tough. So it's always about, like, do we have a clear target, a clear trend to break to that target, a way to position ourselves for that trend break so we can get to the target. Do we have targets for each contract that we have, like one contract to make it safe to hold the others, another contract to sell at the target, and then one more to hold for beyond it. And that's the minimum to get those the ability to make it safe, to get the ability to take some off at the profit target, to get the ability to continue holding through the profit target. It means that you can hold beyond your target. It means that you can make it safe to hold to the target, and it means that you can take profit at the target. And I'm like, well, what am I missing? Have I thought of everything? I'm like, if I haven't, well, we need to think of it. Like, it's like everyone can be part of it. You know what I mean? It's like because that's the idea. And I mean, like, there's only so many variables that we can think of, and when we get them all down and we've thought of all the variables, um, if things still are not going well, then we have to break down all of the variables in the situation and understand more about what's going on. Because clearly, if something went wrong, then there is something that wasn't understood about the situation. Because, like I say, I believe that the market is always moving the right way, and it's us that are out of line with it if we're not making money. And the only way to get in line with it is to understand those situations that we really don't feel comfortable with, and understand more about them so we can understand when they leave, when they're about to start, when if we get even the hint of it starting to act like it does in an environment that we don't like, then we'll know about it because we know exactly how it moves. And it's like it's about putting yourself in that uncomfortable situation. Like, be comfortable with being uncomfortable. It's kind of like what, like, you have to be familiar with putting yourself in an uncomfortable position because you're curious about, and it's not positioning yourself financially like by buying a trade, but watching something that otherwise is unfamiliar, patterns that are developing, failed patterns. Like, a lot of people would be like, oh, this Head and Shoulders is failing, walk out of the room. And it's like, well, how is it failing? What did it mean when it failed? Why did it fail? What was the environment? And it's like those are the things that go through my head, and I'm like, well, next time, are we going to be ready for it to fail? Becomes a question, or is it going to fail on us again? You know, and it's like one of them is proactive, right? And I'm like, that's the good thing. One of them. One of them is control. The other one is like neglect, and I'm like, what's? Yeah, I see that there's an option to even try to control it, to try to have an impact on your situation, or to neglect it and just avoid it. And I mean, that's like the options that we're given when in the face of danger. We can either deal with it or we can try and run away from it. And one of them takes control of the situation. The other one, you're a victim. The danger might get the best of you. And that's never a good position to be in. And it's the same in finance. So that's why I often refer to it as the institutions as like the sharks going after the seals kind of thing. Um, the bigger entities going after the little ones kind of thing. The learned and the unlearned. It's like it's pretty interesting. Pretty interesting actually. And it's like the age of the accounts is also like very old against the fresh. And you know, and that, like, there'll be the entities that consider a vast amount of information and have multiple people working on one account, where it's opposite and inverse again for the individual. And I just say these things just to bring awareness to them so that we're not like oblivious about the enemy that is effectively, as I prove every day, trying to trying to work against us. And I mean, you could call it the institution or the composite man, but to understand is the game as they play it is the only way around it, and it changes frequently. And and like a day like today, we can say things that we've never seen before are subject to being able to happen. Because when we like for oh sorry, it's a meta. The idea that we have this kind of ability to make patterns that otherwise wouldn't be able to form if the volatility didn't exist. I mean, it's like good luck doing this without some kind of movement there. Like these are huge moves. Just to get back to the triangle, that's 4.9%, and the whole move is 11%. That's huge. People go for that in a year. And it was clear as day from this point on that we were going to get back to that bar and get through it. That we were going to get to the gold bar. Not 1 second did I not say that it was going to get back to that gold bar, and it went through it to this other one, which I also placed that day. This is a gold bar where only wicks and spikes managed past it, and it's like this could really wake up again on Amazon earnings as well. I can see Amazon's really fighting to get back to this middle medium bar now. Could we be on a fourth wave? That's a major question that I have for Amazon right now. This line, it becomes like a red-yellow line. You can see we're at an 88. Managed it down to a 227 on Amazon. 41, sorry. And I mean, I can only remember Amazon retest, right? Like the idea that, Amazon on its earnings day before was absolutely terrible at retesting. Like it did something extraordinary on its movement. I don't know if it was last earnings or the earnings before it, but it was an earnings not too long ago, I guess. My perception of time is way off. Could be like years ago now, for all I know. But at the end of the day, it definitely came down as an Amazon retest for me, and that was basically where we could break a trend and then come back down and retest it at a more extreme level than we broke it at. And the market shared that characteristic for days after Amazon did it. So things like that and things like this event can really, shake things up for a few days, especially the next day. Like, the Friday that's going to happen right after the earnings. I mean, there's no companies that come out on Friday. Um, we've managed to get to the 188 on the Nasdaq. The same response to the trends as Amazon seems to be having. Let's go ahead and take a look here. Now you want to know what's funny about this? The Nasdaq has incredibly more space to the downtrend, and I think that yes, there is another one here on Amazon. It's just the first one's gonna have to break in order to ever get there. So they both have a little bit of space. If they fill the space by running, it affects the ability to run properly, and it invites a retest. And I'm like, well, I can see on both of them the value in being able to go sideways, have a triangle on either side. Both of the like I mentioned not too long ago, when we were originally making this wave, could it be similar to the fourth? Because I mean, we have a second wave here. We haven't managed to pull that off here yet on the Nasdaq, but what we've done in the second wave on Amazon, working our way through that as well. So funny enough, it can be a little bit smaller on the fourth wave as well, but what it suggests is that there could be a secondary low at the minimum, um, as a five-wave move can be constructed. There's certainly enough space between the trends on the Nasdaq. An interesting part or place to have it on Amazon at the 78% retracement though, because that's like a level where we had 11 low zones in the past. I want to know what What's going on with this chart? Okay, okay. That's really interesting that we've managed to move out of the bottom now. Roughly what we did here. Exactly the same, but on this chart, I've got a 188 and a 200 here. Where the B point is right there. I moved a bit. Honestly, I can change that. It's curious because everything beyond that point seems spikes. Why would it get such a nice response? Comes the next question. And I can already see that today it's in the business of using fibs that are placed differently. So this one, it's just not counting that. So I mean, what that will look like, people on QQQ might have that, especially people that don't display after hours movements, which sometimes that's a default setting and nobody will ever change it. So it's like, okay, they might not see what the after hours movements look like. Especially if the brokers don't allow trading on it. But we do have to watch out for Amazon running into a trend and trying to break it. It could increase volatility across the board. We can see that they're kind of moving in sync right now, but it's roughly the time of day where we could be a little bit lower on the ATR. I mean, it started to like plateau a little bit there. It looks like we might start to see an increase again. It's not incredibly low by any means, hanging in there like what, at 13 or something, or no, 11. But the high of this range can be 13, and it was upwards of 21, which is as high as what it was yesterday at the close. So already, right at the open, a lot of volatility. Of course, many people couldn't trade their exposure to Facebook until the next day if they traded options. So the 188s caused us to move back to the 161. I can't help but notice this 188 just had one response. Another thing that could otherwise be considered rather new. But is it the same as what we've done here? Not quite. But it's good to keep an eye on whether or not we're making the same amount of time as the second wave as well, because there certainly is enough time for it. See, the Amazon had a negative response to its trend. The market felt that as well. And when it does do that, it makes a new trend. And obviously, it's already on there on Amazon, but the Nasdaq definitely can have one. I can't help but question the distance that we were using before to make secondary lows so clearly. Is it something that's interested in being so similar? Like after all, the similarity would be to the second wave, and we're on the fourth. They're supposed to be similar anyway, so if it is, it could look like the construction of the fifth wave in the event that we get two equal lows. It's intriguing as well that, such a similar move that caused nearly doubling of the price happens again and doubles in the opposite direction. But it's even lower, Crazy. Like when we made this move it was capable of inflicting this much movement after. And I mean, the same components are here in reverse. So like this dump right here, I mean, it doesn't look nice because I haven't traced it, but basically it's the same as what we did here, give or take a couple points, right? So we can see that the small double bottom like pattern, the movement that we had here associated with the green zone both times, has managed to inflict a movement as large as this away from the original smaller movement. Now, undeniably, every single one of these movements begins at the same spot. Every single one of those movements are the components that we currently are working with. We've got basically the same thing happening in reverse. And what that could look like is in a simple fashion. So far, we've managed to do this move, which is here, but it's on the other side. This. You could say that out of all of it, because every single move that we have starts from a medium point, could be interested in returning back to the mean. And I mean, is it the same case on Amazon that, from this movement here, I'm curious actually, 241? Check something. So it was roughly between the 241 and 227, more like the 227 actually. And then we get down here, and we're at the 241, 227. Thing that's definitely becoming the case though is, let's take a look at these components in a different way, different perspective. Um, when we're going down, we're making a move that's with the trend, that's following every rule with this yellow line and its ability to go down. But when we move against the trend, we've moved against the trend a particular amount, and it's grinded, and it's acted differently when it's done that. And it's nothing like what it is when it's moving with the trend. And we had another move that was moving with the trend like that. And what we're doing now is nothing like this, right? So I'm like, it's just a fact, right? So I'm like, okay, uh, are we in another counter trend move? And does it produce anything of similar sort? Now, of course, in an Elliott wave, when it makes a 5 wave move, it goes 1, 2, 3, 4, and 5. And it's very similar to what we're doing right now. It involves two counter trend pullbacks, and basically throughout those counter trend pullbacks, there can be certain characteristics that we can find similarities in. In this case, they're incredibly different in nearly every single way. And it makes me think about whether or not it is actually going to be part of something like a three drives pattern, but it is definitely producing its fifth wave right now. And I can't help but remember the specific move we used to do. Now, what we're doing right now is not this move. It looks like maybe half of it. But what it does look like is it looks like it's taking the same amount of time. Looks like it's taking the same rough amount of time. It's making an effort. And what's interesting about taking that amount of time to make a move that looks like what anything of the sort that we're doing right now is that it finishes. And every single time that we've done that, it it has ended the counter trend move, one way or the other. Now, remember with the H pattern, of course, it's risky to take because it can make a five-wave move. But when we've already gotten one H, it's more likely that the next H struggles to produce another. Now, it's not impossible though. At the end of the day, we've found that it can carry on for multiple different moves. So having an awareness of what it looks like on a bigger picture is helpful. And we've got bigger picture fibs here as well. Like for instance, let's take a look at the hourly for a second. Take some of these short-term lines off. But there's definitely some bigger fibs in there that haven't been hit. And not to mention the red yellow line, which really I'm gonna put over top of it because it's really that's what it's been used like as a blue line. It's been returning back to that line very consistently. And I think that one thing that's clear about that line is when we do run into it, especially if we run into it hard, it can take a lot of the volatility away, and it can also, if it blows through it, then it has to pay the price kind of thing. So we have to watch out for that. Even when it blew through it to the downside, it tried to lunge back for it another time. Now we do have another major red yellow line here that was relatively major, and it's not too far away. But what we have going on here is a move that's very similar to a fourth wave on a bigger picture. After all, it's pulled back and allowed for a new trend to be drawn, and undeniably, the pattern that we saw at the beginning of the day is literally forming in here. The sideways move, we had an upwards move, and then a big downwards move, which ultimately ended up testing the underside of the original sideways move. And that basically puts a lot of interest on the point that we have there. Now, of course, a trend that's of this caliber, a major downtrend like that, the event that it breaks, we definitely want to know about it. We're going to go ahead and take a look here. Short term, we can definitely take a look at these little fibs here. We've got a 188-200 and almost looks like a 227 got hit on that smaller scale there. But bigger picture, there's also that 188-200 that has a fib all the way up here. So it's kind of a controversial level. I can understand why it had a response altogether and why it deserved the 2 points that seem to pause us for the longest period of time and create what could be the largest counter trend move that we're capable of making in this trend. Amazon, it looks very much like a fourth wave. Like it has the same characteristics as well as the Nasdaq. However, it's a little bit grindier, and they haven't made a new low. So Amazon is still playing the 11 low zone game at the 78 and 88% retracement, where it's common that in order to reduce the amount of space in between the trend and the price, a chop along the 88 and 78 is necessary to getting us closer to the trend so that we can break it and reverse back to the points. Now, of course, I just want to take note of as well that Amazon had a little bit of a B point here too. And notice that when it spiked past it, it immediately came right back to that B point before it started to get a little fuzzy, right? So just keep in mind, levels like that can offer short-term targets that otherwise, same thing goes on Nasdaq, although it didn't work out the same kind of way. If you ever do find this kind of movement, it does work very effectively back to the short-term targets. Now, in this case, on the Nasdaq, we can see that these B points they're relatively set up differently. This one here is actually a lot more significant than the one that we have down here. This one down here, it could just be it could work as a barrier like the one that we had here originally. The distance that we have on the either side of this test, it could be similar, like the distance that we had here, very much similar to what we could have here. These 2 points right here, like this point right here, as a matter of fact, could be something of an interest for the break of the trend. I am very interested in it, however. So why? And it's because this amount of time has been very significant, not only with this here, because it was the amount of time that it took to spike out of the top, but the amount of time that it took to spend in the middle. Very, very similar. And like even here, when it was done, this space, it chose to use that amount of spikage to end this consolidation. And that's how we knew it was the 161 on both sides. This is basically a 161 extension away from this little area here. But it's deja vu. If if you remember when we were up here and I was like, well, you want to focus on hedging it? If you did hedge it, now you have something else to hedge. But it's twice the distance of the last thing that you hedged. And it's always going to be that way if you manage to continue the process. And it gets that much more difficult for it to get you out. But you can see now that that expansion has come down to three major new lows here as well as three major highs here as well. And I'm like, okay, is it true? This distance right here between these two highs, the distance that it made up here and the distance it made down here? Because I mean, it looks like it to me. Very similar. Interesting that it finds so much respect in it. Something so simple. Initial positive response. Amazon's not even moving. They're in a triangle. A triangle that cannot triangulate anymore because as time goes on, it will be forced out of this kind of confinement area where Technically, they could have a trend coming from the bottom here too. Nasdaq's running into a bunch of 188s. Definitely, definitely intriguing.
Yeah, down 300 from the day,
Mm-hmm.
from the open, I think, at the high. Does happen fast, eh? Like you said,
Uh,
clears fast.
I think it'll be nothing compared to the movements it can make at the actual release, because there's not going to be another company that can contradict this movement, right? And quite interesting that the other ones, I really haven't ended up moving um, too much at all. Yesterday's was better than the day before, but
This one's
it's
actually had a good report, though, eh?
yeah, but the market doesn't seem to care as much as it used to about these companies. They've just like,
Following the technicals, really.
well, yeah, but the thing is not usually do they have companies as big as that and them not be aligned. Like they've been aligned for so long now. It's been a while since we've had a company like Microsoft and Google go against each other and the market just stay in the middle while they both freak out.
Yeah. Well, Microsoft has come back down, so it's more in line with the rest of them now. Same with Visa.
Yeah, take a look. Yeah, they're struggling today for sure. But
I think a good time to invest in all of these companies would be when the weekly RSI is down at the bottom.
yeah,
You
which
know
is
what I mean?
like every 5 years.
Well, hey, it's in the middle right now. It's in the
Yep,
middle.
it's not a good spot to
So
develop a long-term position, that's for sure.
hell no. Oh well. Hell no.
Yeah, especially with all the uncertainty in the economic situations out there. Everybody's getting involved with war and stuff, and all the powerful people are showing off all their weapons and stuff. And
Yeah. So I mean, if we reached a high of 16,000, right, and we're halfway down to 14,000, so it makes sense that this thing goes all the way down to 12,000 or thereabouts is the floor. Would you say?
it depends. I mean, today could be the floor if we get Amazon out of the way. What's the next thing? It's gonna
Well,
be Tuesday or
it's
something.
just yeah, it's just that the weekly is right in the middle though, right?
Yeah, exactly. So there's a lot of risk in trying to be opinionative about the middle area and trying to
Yeah.
fight really hard about getting a position in the middle. It just doesn't make sense. But when it has been hard, that's when it's interesting. When it has been grindy, when it is grindy, finding out, what it looks like after, an entire grind day. Like I feel like after these earnings, we could get a day where it just goes completely sideways. Um, and that would be acceptable, like,
Makes sense because I mean, after it comes down, doesn't matter when it comes down, it always goes sideways and then it goes up. It just doesn't pop back up like, you know, seems like it just sort of settles on the bottom for a bit and then it goes up.
yep. And the best moves seem to happen at times that the public are seemingly, you would find it would be difficult for most people to be a part of. That's the interesting part. Like they wait, yesterday it was 416, and it's a perfect time because no more options traders can be trading QQQ or any all their exposure just basically gets frozen, and it's only good for the people that can trade after, and they move the market so hard, so particularly, and like for them to move Facebook like that, it's like they made their mark on Facebook. Like it literally went the same distance out of the top and the bottom 2 times. And I'm like, the work of the public on an angled trend. I'm like, no way. No way. I don't think anybody else has this chart. The people that do have the chart, they're clearly using it exactly accurately. Like they started at the bottom and came to the top, and it's all around that bar. And I'm like, that bar, you know why it was that bar? Because it did it again on the same bar. If it didn't do it again on the same bar, then that would be an argument. But to show us that it can make it even not only once, but twice, and what was my expectation with it? My expectation was that we would take what we did out of the bottom and produce it out of the other side. That was how I got my gold bar. And that's exactly what it was interested in doing, is putting what it did on the other side onto the top. So it effectively took all of the difficulty in that environment, and it bought every single person out of it. And it kind of like it's one way to really kind of flush the environment, and like anybody that wants to be in is gonna have to, essentially uh, get involved with this strange new environment that Facebook really hasn't shown. And why would it? Because it wasn't earnings. I mean, it trades this way usually. It usually looks like this. I mean, it's pretty good, but what we did yesterday was extraordinary in terms of its ability. And when it was extraordinary, it chose to be even around that blue bar, and that's a fact. So it's interesting. And it just so happens to be at times where you could find it incredibly unlikely that the majority of the public has much influence. So that's my
Out of all the stocks that I own, Dollar General is the only one going up today.
oh,
It's
that's
just
interesting.
it's got like an inverse sort of reaction to the Nasdaq because it was going down for the longest time, and now it's just starting to pick up.
Yeah. This was the one I said to add to, right?
Yeah, yeah, yeah.
So that's a good one. So there's a lot of interesting facts about the way that it has moved today. I want to check out the RSI more, because alongside all of the distancing and everything that we've been making, um, it's managed to keep everything extraordinarily equal and even. And in this, I'm getting deja vu heavily with something that we've done earlier in the day, a three drives pattern. um, Essentially, where I remember explaining how the third consecutive low can bring it distinctly back to the first of the three, but maybe not much more. Not at first, at least. You can see the same thing is happening here on Amazon, and it happened earlier on Amazon too. So it's like what we're doing is effectively the same kind of pattern in, I think, remarkably the same kind of way as well. It takes roughly the same amount of time. Sorry. Not exactly a 2, but it's playing out back to the first node that it made there as well. So I can see that. Looks like the market turned around a little bit sooner than Amazon though.
John, are you muted?
Oh yeah, sorry about that. So I was explaining how we did this. We held this low here, right? And it was the exact distance that we made out of both sides. And that still holds into this low. But it wasn't just because that distance that I was interested in it. It was because it started out as expansion like this, low into high, into low, into high, into what was a crappy low, but made it higher high. And what's funny about that is it made up for it by making this distance here, this distance here, is the best visual way to explain it. Hold on a second. I'll show you on a different chart. Um, yes, this chart, the chart that I originally showed on. So this one is the middle area. I had two highs here. This low and this low are exactly the same distance from this one and this one. Basically, this middle area has a distance between these two squares. It's the distance that we have down here and the distance that we have up here, give or take a couple points. So I'm like, well, what I can see is I'm like, it's taken this to the whole next level. Do you know how the relationship with this low and this low, or sorry, these 2 points right here, amounted for it to get to this point up here? But that same distance was used down here. And as long as we understand that, we can see that it happened here. This distance and this distance, like it did with this distance and the next distance. So like this relationship up here with this high, which was the next circle, is the same as what we had going on here. And then this one was the same to this one as it was down here. And it's like, this is how we've been expanding, into three extremes with three extremes. Now, how many times have I showed today, and how many times has the market showed us today that three can lead to three? Or sorry, three can lead to one. So we have 1, 2, and 3. When we make those three lows, we can go back to the first, number 1. And I mean, we've done that twice already in this trend. Probably more, actually. Like, if you count these lows here, I'm like, how many lows did it make there? It got all of them there. It definitely got the third one. So I'm like, even here, goes 1, 2, and 3. It got that one too. It also got these three and returned. But this one here, 1, 2, and 3, totally returned, right? So I'm like, what about big 1, 2, and 3 at the bottom? Could we return back to the first of the three? You know what that would be? That would be right back in the middle of like this whole thing, the whole middle portion. So I'm like, well, it's a hell of an expansion for sure. We can see that, as a matter of fact, that we have those three highs that are all equally distance apart, the same distance that we had on the other side of the range and below. So, and it's interesting to me to see that this distance here is the distance between the two as well. Like, it's very much similar. So, and then this distance, of course, being the middle. I'm like, well, now we're getting into a movement that we can't really double again, I don't think, before the report. I mean, you know what it would look like? It would look like this high here. So good luck with that, right? This. We'll leave that there just because, but I mean, I'm not gonna complain if it definitely tries it, but like, I mean, it's got limited time, I suppose. Actually, wait, hold on. That's the middle of the night. Yeah, I could totally do that. My perception of the time is off. I'm gonna put the end of day line in there, the imbalance, so I can see how much time these patterns have to play out. Because I think time than they like. I'm like, what can we do here? Can we make a giant inverse head and shoulders out of this day? Are we on the head? Like, what are the odds that that's the left, that's the head, this is the right, played out. This is the left to an inverse, the head to an inverse. We could make the right to an inverse. End up right back in the middle. Favorite pattern of the month, right? Effectively just like this. Ah, a little glitchy there, but you know what I mean. Same thing. Okay. And then if it did that, it would be a wacky version of this. Like basically the same components though. Up into down, same up into down. Then we make the head up into down again. Do the right shoulder, which plays out into the head of the inverse, and we did that here. Then the right shoulder forms, and we do that there. So it's the same exact components, rather the sizes may be different and such, but whatever. At the end of the day, if it's going to do that, it means it ends up back in the middle. 8 times across the same level does it like to go in both schematics. So it's a good understanding to have that throughout this environment, what it likes to do is spike out of the top and spike out of the bottom just to return back to the middle. 1, 2, 3, 4, 5, 6, 7, 8 times. And in here, same thing obviously. I'm like, okay, well, I've come to know this as a way to consolidate, which is funny because if you look up either one of those patterns, they're supposed to actually bring movement, like it did, sure. But it's not very good if it just ends up taking it back to make the same pattern in reverse. Now, I'll tell you one thing. When we do this, this has been happening a lot, which is contrary to the way that it's supposed to actually work. Like you can see the value of this sending it down. That's what happened today, right? So I'm like, all right, all right, all right. What does this mean then? If that sends it down, this one should send it up, right? So when we do something like this and it goes down right after it's shown everyone that the thing in reverse can literally play out, it kind of will leave people scratching their heads, right? Why would it do this? Now let me show you it doing this today. For instance, here, where we made a head and shoulders and an inverse head and shoulders was here. You can see the last thing that it ended on was a low with a lower low and a higher low just to fall through the bottom. And then, not the only time, um, here. This was a sorry attempt at it though. So we could say that, you know, this could have been part of the head and shoulders going down. This could have been part of the inverse head and shoulders. And what happened, right? Because I'm like, we can all clearly see that there was a big bad bearish head and shoulders, and then a bullish inverse that did not do the same thing this did. It was supposed to go up, but it didn't at the end of the day. So is this something that we do while we're in this red yellow line? Because it seems to be allowed to happen so long as we're within the confines of that red yellow line. So I'm like, well, this is a way of this trend. sometimes when you place them on the longer term time frames, they're not as precise actually. So it's good to go in and readjust them for accuracy. So those are just a few interesting points that I'm considering in this environment, and the value of an inverse head and shoulders, the value of it making three consecutive lows, coming back to the first of the three, um, made three consecutive highs, and sure was interested in coming back to them. So on a day where there's such a big event, there's no better place to have the imbalance than somewhere centralized in an area that can be contained. So I have reason to believe that interested in getting to that blue line and through it. This trend that we just broke, I don't like we didn't retest it. It's terrible. It means that during the event, if there's a snap down at the initial part, like there was on Facebook at the initial opening, we can see that that snap down could hit a line like that. After all, it is untested, so it's like it's good to have it on there still. Of course, Amazon's moving very similarly. As we get closer to the report time, this is the imbalance, but by that point, everything has to be made safe, of course. The risk of, you know, volatility is relatively high because of the anticipation of the report. Now we're closing in on the amount of time that we have left on this gap here too. I cannot help but notice that we're at the VWAP band from the morning. Breaking back through that VWAP band and using it as support ultimately could really buy us a ticket back to the VWAP itself, which looks like it would be roughly around the 61, maybe lower. So as we currently sit right now, the red zone is the 61. And the 61 is important because it was what we did before when we did pull back. And what would it look like now if we were to do this move? Because it was only so clear that we managed to pull that one off again. So what if we do this one? It would be exactly back to the B point. Interestingly enough, I look for whether or not we've managed to do this consolidation anywhere else and what that could look like. And I see this area here. What that area was associated with was three consecutive lows that came back to the first of the three. So I can't help but notice that we have two highs here. And what are the odds that we make three consecutive highs and return back to the first of the three? Which is something we haven't seen yet today. Because since we've been beneath these trends, it's only been showing us three lows. It's kind of hard for us to make three highs while we're inside of this downtrend. So when we break a downtrend like we have right now, we've already taken this part of the movement that we've been doing in here and potentially ended it. Now you want to know what's funny about that movement there? This trend particularly right here, everything about this trend, it all started when this trend began. And when this trend began, it was the trend that allowed us to see the three drives so clearly. Now, of course, there was something similar to it going on in here, but it was not as clean and crisp as this 3 drives, and it wasn't as clean and crisp as this 3 drives. So, could the trend of the 3 drives pattern be over, and we're interested in seeing maybe 3 drives in the opposite direction because we've broken that trend? Because it is true that this trend, it didn't break by going sideways, it broke by going up on an uptrend. So it's like a fact. So we want to consider that one. It's also building a POC here. Now, remarkably, why on earth could there even be a node this size here? If we look at all of the movement, like I'm considering even some of the pre-market movement. But if we take all these fibs off for a second and just take a look here at what's going on with the volume profile, we've got this node, this node, this node, and this node. And this one is the highest node now. We've done more volume at this level than we have here or here. Interestingly enough, it's spaced out in 3 portions, and there are also 2 gaps because of it. Now, of course, on the other side of the gap that we have right now, it is a B point. Now, it's becoming a fact that until we get to the yellow line, we can't expect it to be able to get to the B point. It has to break the yellow line to get there. So it becomes a question of if we exert all of our energy to get to the yellow line now, will it even be able to get to the B points? Taking some time could otherwise be necessary. After all, this trend did not get a retest. And like I said, it could get a retest maybe on the report if it doesn't now. But it's best to test it so that we don't have to later. And let's say, for instance, the report is bad and it's got an untested trend line like that. Well, what a better time to get it done, right? It's got an excuse to go for it. And even if it looks extreme, like it's like way down off the chart now, it could still manage it. The volatility could be rather intense. Because you want to know what's funny about days like today is in the event that there is a certain consensus, like a certain, what could I say? Like if people have the same idea about it, if they're all thinking something like it's going to go up or something like that, and it's not going up, um, then it can create a shock. But let's say, for instance, if everyone thinks it's going to be crap and it's been going down, well, it might not move then because it's already done what people expected. But on a day where we could end in the middle, because how long did it take to do this movement? This movement, it took 1 hour and 55 minutes. And I am curious about that because doing that movement could get us back to the middle, and easily. Oh yeah, when I put this trend like this, it's like this move right here could be produced out of this move here. And maybe it's not even that one, but a smaller move that gives us the same level. So I take this line, and it's basically like it originally started by doubling. You can see how it doubled out of the bottom like that. What are the odds we get it on the other side, like Facebook? So, I mean, the value of breaking this line right here is to at least get this movement here. At least. So I look for that.
I'm thinking there must be people out there that just automatically, like every single time this thing comes down, start trading at the sight of any spike at the 61 because, I guess they're not looking at the MACD or whatever, but I've noticed that like almost every single time. And we're in a down market right now. And I think tons of people are getting burnt on that sort of ideology that I'm going to just take it at the 61.
Yeah, no, I haven't been looking at the 61s too much, but if you're
Yeah,
you
just,
you're looking at them and you're not seeing it testing the RSI, so you're skeptical and you don't buy it, right?
oh, I'm skeptical as soon as I look at that too. But I mean, I'm skeptical as soon as I look at the MACD and I'm looking at it, I go, we're coming down a little bit more than that.
Yeah, exactly. And it's like as soon as you find something that's skeptical, it's like you just think it's like you don't deserve to take that trade. It's terrible, right? Like, you don't want to take it ever. Nobody deserves to take that, right? It's terrible terrible idea of buying in somewhere that otherwise worked in the past, but if you can see that there's a few things that are completely different about that situation, it draws that skepticism, and for good reason. It's like it's it's a preventative measure.
I notice this stuff like almost every single time that this thing's coming down, it like pauses slightly at 61, and there's people buying it and stuff like that, and then they just getting burnt. And you say, "What you buying here for? It doesn't make any sense."
Mhm.
Because before I started here a couple of years ago, I went on YouTube and listened to some YouTube videos, and they're saying, "Oh yeah, the 61 is gold. Always
Mhm.
take the 61, right?" I mean, no,
Yeah, exactly.
because people are selling that stuff, right? They're selling that idea every single time it goes down. Take the 61.
Yep. It's like what 61 is appropriate, and it's not going to be because of the last reason that it worked either. And it's like they I think that people try to get an easy break in the market, but it's when you make it difficult, and you accept it, not when you make it difficult, but when you accept the difficulty and you work through it and you make it easier by accepting that difficulty, by understanding that there's certain steps that have to be followed, certain variables that have to be understood, and you just have to basically put that work in, and it pays so much more than you'd think to do the work the market actually respects. Because when it respects your work, you get paid very well. You get paid with the accuracy that it gets, exactly from where you think it's going to go to where it's supposed to go. And it develops like expectations where you can get, you know levels like this retest of this line, for instance, the expectation that it never was retested, and that it could be retested at any given time, including up until the report. Now that it's retested, we don't have to go for the retest again. Like, I can see Amazon's actually coming up to the B point there too, but it's good to just look for exactly what that market environment is thriving on, and see if it is something that is relatable to another environment that's also done something similar. And if it's something really recent, um, you have to understand whether or not that area has been prone to traps, or whether or not that area is safe to trade that particular pattern in. Because sometimes we've seen that, you know, like yesterday, it would throw in every single move that we had out of the consolidation. It either came back to the consolidation and dumped, or it made a move like that and it ended up rallying out of it and then coming back. But then the actual low that counted, it made the consolidation, no spike, and it ran after maybe 5 or 6 times of being able to do the other one. And it completely changed on the time that counted, having never shown its ability to actually move out of a consolidation with no spike. Everybody that's just observing will assume that every consolidation has to have a spike, as everyone in the past did. But the most important one changed. And I'm like, well, I didn't make that up. It's like we can check. I did it on this chart. Curious about these times in here. So here was the first one. At the end of the day, it was very much clear. This was 9 9:30 up here, so we're basically right at the open, and it spiked down, and that spike showed everyone that it led into the doubling of that range. So everyone got to see that that movement was then doubled as a result of that spike in the wrong direction out of that channel. So what does it mean? Everybody that was buying long in this area, expecting it to be able to double for them and do what it's supposed to do, they just came down and snatched everyone's position and ran right to the target. That's interesting. And then, we could even see here that throughout other parts of the day, that we could have consolidations and they might place spikes on the bottom before they run. But here it was very distinctive that it was very, 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 very similar to what we had going on at the beginning of the day. And it worked out really well. It managed to take the entire area and it doubled the whole thing. And it came back to test anybody out of that area. And I was like, okay, this was one way that the market was able to go like this. And it was also one way for the market to rise on a W and then rise on a W. Two bearish patterns that advance an uptrend. So it's quite interesting. So then we could see with the amount of spikeages or spikes that were coming out of the bottom, uh, we didn't really we didn't break out of or spike out of that bottom one. Man, that was the earnings. Let me take a look at this. This is a different time, and like I can see that they were interested in making that advancement 3 times at a different time. Tuesday. That was the first earnings report actually. And just out of curiosity, a rough shape, I want to see if it's anything remotely similar. Like we can see the same kind of expansion that we've been doing in the past kind of showing itself again in the future. So we know we're looking at something that's prone to doing something similar to what we saw before. And it just so happens to be on a different earnings day. Because the way I see this too, we've managed to make this as a pullback before. We've done something remarkably similar. And I'm like, you want to know how similar it is? Look at how this one ended. Or sorry, how this one started. So similar. Why? I don't choose for it to be this way, but it is very remarkably similar. Give or take the wicks and spikes, but I mean, darn, is it not true that things can end how they begin? And it is an excuse to make an S wave, and I think that that's something that we're interested in doing. So, you know, doesn't have to be very nice about it though. Every time we get to this major high on both of these levels, it's kind of controversial. I think the most effective way to actually do this is not on a quick blast, but on a slow grind. Like I'm kind of against it being as quick as it was here, but it's not a bad way to look at it though. In the future, when you're like, all right, when I do this, can this be similar? to this. I mean, after all, in this sequence, when does it go up? It goes up at the beginning and it goes up at the end, interestingly enough. If you take the components, it's true. The motions that bring us back to the mean are the same motion that originally brought us away from it. And we see that, this one that we're doing right now, it looks a little bit more like this. Like that's a thing. We do that. Basically, it's the same thing as this, though. Not gonna lie. Don't get too uh, out of it with it because it's the same thing. It's basically like a three-wave move. The components are that we've got one movement going up, a large movement going down, and then another smaller movement, exactly well similar to the first one, uh, going up, separated by one big move. Uh, that ultimately, and the big move, it ends up going in the opposite direction of the big move, which is contrary to popular belief because no matter what you do, if you do this here, you know, the trend that formed to make that big move undeniably breaks by the moment that it meets the middle, no? Or can we still be in that trend somehow? So it's like, it really makes it clear that there is a portion on the bottom and that there is a portion on the top, and it takes one, doubles it, and halves it. That's what happens when we do this. We take one, which is, this movement here, and this movement here, we take that component, double it, and then half it. I call it 2 steps forward, 1 step back. So that's what it does. And I mean, like, what do we have with this right here? Well, I mean, I'm not gonna lie, it is very much similar to what we did there. Could we make a 161 out of both sides? Because that's what we did before, you know? Like, what it reminds me of is when we make a triangle and we do an S wave out of it. It's like, this is the consolidation. This is cleaning everyone out of the consolidation. Just like this move right here. Because basically, by the end of the entire sequence here, at some point, anybody that's traded inside of this consolidation, they go for them. Like, if this doesn't get you out, then this one will. But who's safe with a position in here when it moves that far out of the distance of the consolidation? Who's safe who have traded in this area when it moves up and down and overlaps every single person inside of the sideways range? And I mean, like, why? What that reminds me of is it reminds me of keeping everyone contained inside of the area that they're allowed to trade in, and they round them all up, stop them out, and go. But if there's too many people in there that benefit from the go, you best believe they'll come back down. And I've come to realize that the more difficult it is, the more likely it actually does reverse. The more time that it takes, the more difficult it is because, taking time is difficult for people and, time is necessary to get to this trend. When we were over here, like, it's clear that we've got a lot of time to get to this trend. And the people that were associated with the first trend don't necessarily have to be incredibly safe because there's so much time. The less time that there is, and the farther away that you are, the safer that you technically are. And now we still have some time. I mean, we don't have as much time as we did when we started. Like in this consolidation, I would suspect that there is less time in it than we have had already. So like we're closer to the end than the beginning, put it simply. Like I would say we're like 65% completed. which is fine. After all, I mean, coming into the end of the day, we want to understand that there's going to be some anticipation moves potentially. I think right now it's all about that VWAP band. Like I said, getting on top of it could be a ticket right to the VWAP. It's left a small B point in there, which is acceptable. It just means no stops are to be dragged above it. If we're conquering this level right now, we might be interested in responding to the yellow. This level, it's related directly to this map up top. And this purple line up top here too. And you can see what the value was of getting underneath that purple line, testing it from the underside, and then continuing down. So first thing was to respond to it. The next thing was to break it. The next thing was to establish it into a resistance and then use it, continue off of. Same kind of thing going on here. Except there was too many people in the way for this, and when they tried to get it to continue, they had to go again, because every time that they do this, there will probably be less and less people, because the people don't consider that it's coming to the trend line. They consider that it's been difficult for them personally, so they 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 dissipate, and yet the trade does become more profitable. It does become closer to the trend line, closer to ending the way that it is, and it's become that this is necessary because it works. And if you notice it as something that is necessary, is so much more difficult for it to actually affect you negatively, because a lot of people look at sideways movement and they feel negative. I mean, like I can't I used to be like that, but I can't remember last time I've done that. Like, because I always find something interesting about it. I always understand something about it. I always see the need for it. I always see the time that it has left, and I understand why it's doing it, and I can understand seeing the value in it ending, and I can see when it ends roughly. So I'm like, okay, that's uh that's fine. Gonna end for everybody, whether they're there or not, right? So I like to have an understanding of the environment. We're almost at the B point of Amazon too. Go ahead and flip the fibs around. Hanging out at the 41% retracement on Amazon. Notice that on the Nasdaq they made it a little bit more tricky for people to stay in, but on Amazon it didn't actually come down to stop them out. It allowed the people from the very, very bottom to stay in. This is the kind of I think that major players are accumulating long on Amazon. I gotta figure out how to turn that off. It's distracting. 5-wave move clearly. Doesn't have to work though. Can fail miserably up to test the yellow line. We have to watch out for that. Currently, what we're doing right now is wearing down this 188. This 188 has worked as resistance so much. It was designed to get us to this level. This level right here, it had the worst response ever, is designed to get us to this level right there. You know how it got a really bad response there and everything? Is it not particularly suspicious that when we move up out of the difficult environment for the individuals, it happens on a very shock-like swift move that just seemingly taps it with absolute precision, not a point more? And then again, through the secondary low on a clear 5-wave move, orchestrated perfectly right back to the same level. Almost like this movement wasn't required because the big chunk of people that were in the way have now been eliminated. And now it's a lot easier to get that swift movement because they're not selling. They don't have anything to sell to take profit. So it's best that they're out of the way so we can move for the end of the day. And if they're out of the way every single day and they don't check the end of the day, they don't even know what they're missing. So it just keeps happening and happening and happening to new people. And they miss the juicy end of day clear cut movements like 5-wave moves. A lot of people will be shorting into this, getting absolutely wrecked. But like I said, it fails to get up because it works exactly as the institutions want it to when they have full control, and I know exactly how they move it. So at the end of the day, I want to point out right now we have just returned back to an old range, exactly the same distance as what we did on the bottom. And like this is how I see the game as they play it. And it changes, like I say, different tomorrow. But it's just another way that they've done this. Sideways, up, and down. But it's just like, like if you've ever played a video game, say you're good at Halo or something like that, do you expect the rounds to go exactly the same way every single time? Like, no. It's either when you're good at it, you've put a lot of hours into it, right? You understand you can pick up a controller and you're probably going to dominate the lobby, right? Or no, is it, or sometimes you just pick up a new game and you get in and you just dominate the lobby, or I'm like no, 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 it takes time, effort, practice, even when you're having fun, so I'm like we owe it to ourselves to have the discipline and the patience that we deserve to be able to get there. And it's hard, but it's good to do hard things, and it's not making it hard, it's accepting that it is hard, like I said earlier, and just rewarding when you do hard things. And at the end of the day, when the market makes its best moves, very precise, very difficult to catch in the sense that it takes a lot of time and patience and accuracy and precision. And the time that it offers at the best prices are very, very minimal. So you have to keep your focus on the eye on the prize, like the best thing to be exposed to. Yet it keeps coming back on you, keeps coming back on you, keeps coming back on you. Do you still want to be exposed though? And can you make your exposure so safe that if it does come back on you 5 or 6 times, it doesn't matter? You know, that's the idea. At the end of the day, when you take off enough to secure a safe stop at the extreme, and let's say for instance it's not profitable at the extreme, guess what? Maybe you need a hedge or two. If you hedged it, you could make up the difference and then find an opportunity to be able to put your stop at the extreme if that's where it should be, right? So it's like if you're in the trade, you're in the trade, but you don't like where you're in, can you find the next dip to be able to put your stop where you deserve it, right? Like, because it might be at a loss if it's at the extreme because you might have been late or something like that. But if it's a move you want exposure to and you want to make it safe, you see an opportunity to make it safe, you can if you hedge. But a lot of people won't even find that option because they're so fixated on the trade that they have and how it's affecting them. And the only thing that they can do to give them control is to sell that position again so that they have no skin in the game. And that's their first option. That's not a good option. It's an easy way out. That's the way I look at it. But it's there's nothing like keeping it past where you thought it would go and having it get to a point where it's so far away from where you are that you don't have to worry about it, which is the idea. And then you just focus on catching the highs every day. because you know you're going to be exposed to the lows, anyways. And if it manages to make a move significant enough to try and come and get you out on the long term, then you should have a hedge that's an even farther distance away than that one was originally. So it'll be even harder to get that hedge out. It by default will become the core because always the longest term trade is the core. Doesn't necessarily have to be a long trade itself. Like there could be a time in the future where the market goes down for a decade or something. It's not like it's impossible. It's totally possible. I don't think, it's gonna happen right now. There's nothing telling me it's gonna happen, but I'm just saying it's possible. Could go up for 20 years, it's possible too, of course. The blue line caused a nuisance on the Nasdaq, but not so much the stock Amazon.
Muted there, John.
Oh yeah, I was just marking the B point there.
Okay.
Like it's When I mentioned it earlier, I was like, we could make this movement out of the other side to try and get back to the middle. Still do that. I was more interested in, this movement here being like that. Yeah, this line up top is pretty hardcore. Well, that's the medium line. Otherwise, it's one of those levels that starts as like a yellow line and ends up becoming a blue one. Doesn't show on the daily. The hourly though. The idea that it just started out as a crisp, clean trend like that, and it always struggled and struggled and came back to it and came back to it, come back to it again. Next time we come back to it, it might be one of the last times we come back to it though. So like, you remember when I was telling everyone about how it's gonna make 3 consecutive highs instead of making 3 consecutive lows? It totally just did that as well. I remember mentioning that when we were on the second high, being like, we're gonna make 3 consecutive highs because we've only made 3 consecutive lows, right? And I'm gonna explain it again because in this trend here, this trend right here, I'll make it red for instance. That trend, we made 3 drives patterns. 1, 2, 3. And they all played out to the first of the 3. 1, 2, 3. And it played out to the first of the 3 and so on and so forth. So it was good at it, right? But never did we ever make a 3 drives pattern going up 2 and 3 and then return back to the first of the 3. So when this trend uh, broke, we didn't really see any new 3 drives patterns to the downside. We saw 3 consecutive highs instead. What a change. Now we're through the final downtrend, which does show parallel to the move that we've had here. And it does show that we've actually come and doubled this range from the past, which is very, very particular. So it means that we've already got the same portion out of one side of this range. This is the proof of it. So we have made it through doing something very, very interesting to me. Everything's about this level here. The B points are all at that level there too, but this level right here, right? It's a level where this spike started, and then it started a larger spike. And then this spike started, and then it started a larger spike, which is roughly the same size as what we had here. Except what the difference was is that it had an incredible amount of time to get to the trend line. The B point was left hanging for many people to get new lows, and anybody that wanted exposure to it was severely put to the test. Even the people that bought the pullback had to get a pullback, you know. And after, anybody that has a strategy of buying late has always been stopped out on any move since the beginning of the trend. So having it go sideways and stop everyone out that tries to be late on any singular move that there is, ending up with it being 1, 2, 3, 4, 5, 6 lows consecutively after 1, 2, 3, 4, 5 lows of every single upwards movement that there was on top of those lows being taken back. That's 11 lows right there that it just made, ironically, in this trend that have all amounted to new lows. And you want to know what has been the predominant, I guess you could say, low maker, like the three drives pattern. The three drives pattern has been number one for being able to get us down when we're going down. And after it's done giving anybody any kind of counter trend move, because it's responsible for the counter trend moves as well. The biggest counter trend moves have happened off of third drives. And if they didn't happen off of them, then they were forming the third drives. So it's one of the two. And now I look at this line because it has been a major support to some of the largest moves that we've had, right? And the move that we had away from this trend is very similar to what we had. It's even larger. Okay, so we didn't even do the same thing. But why I say it's similar is because we've essentially moved away from it and come back to it all roughly along the same lines of equality. Not much difference. What difference there is, it's little. And I'm like, okay, that's fine. But at the end of the day, we get this blue line as a medium bar. It's like a separator between what has been allowed to be the baseline of many of the moves, the beginning of some of the largest moves, and the end of some of the smallest ones. And that's interesting to me because, you know, it all has to do with these B points too. These are also the elephants in the room. Especially this one that's managed to come down that much. Just checking something. But of course, this range here, it was created today, and we can see that the distance that it managed to make out of the top is very similar to that it made out of the bottom, returning back to the range with the same spike out of either side. You know, could this be part of another sequence where we are trying to expand like we are on the short term? Like this right here is definitely clear that we've expanded from a lower into higher highs, lower lows into higher highs. And I mean, that's not uncommon lately, right? So we've been seeing that a lot. Of course, we can see it happening on the bigger picture here too. But one thing that's true about this is, out of the lows that we've made and the highs that we've got three consecutive highs. Because you could say that it starts at this low and it makes the ability to make that high. And then it comes down to a new low, into a new high, and makes another high before a new low. This one kind of puts a little bit of a wrench in it, but effectively, it wasn't a strong enough pullback, and it wasn't a new extreme. to be considered the same as one of these. So basically, each time that it made one of these circles, it was a condition that it was an extreme. And it was a condition that it was an even more extreme than the last extreme. Every single time. Like this one, it was more. This one, it was more. This one, it was more. And this one, it was more. But how much more became the question as well. Well, the same distance that we had away from this channel, it made me think about this distance to this distance and what the similarity could be between these two lows. And I found that they were actually the same. So basically, if I take this area here and just make it a range so we can just see it for a second, and I put it over the bottom, you can see the distance between circle 1 and circle 2, the same distance between circle 1 and circle 2 in the opposite direction, no? All right, so we understand that. Now we go to this distance right here, circle 2 and circle 3. The distance between circle 2 and circle 3 is not exactly the same, but it is pretty darn close. So I'm like, interesting. This distance here that we had, that was the divider between the 2 points on either side, it does look like it was really, you know, originated from the amount of volatility that it could have in this first range, but it was a little bit wider. So I'm like, there's a pattern there. You know, we do have an expansion at a certain rate on both sides. Now it's gotten to the point where our expansion has become a higher rate at more of a move is required now than ever before. What would the next one look like if we were to expand? You know, because we've taken this move right here and nearly doubled it to expand to this move here. Is it true that in order to expand again, it would have to take all of that movement and go even farther? Let's get in a circle. Anyways, I don't, what is it to put a circle there? Well, remember, if it gets there, at the end of the day, it would be shocking to see that. 100%. Anyways, just like it would be shocking to see that, which I think looks something like this, just to confirm. Yeah, area there. Gives us some idea of what the projection of the move could be on the earnings report too, to be honest. If it is to continue expanding from a technical perspective, the next mathematical expansion level would be over there or over here. Which, what I'm going to do is I'm going to put blue bars over top of the, they're not, I don't think that time is something that is doable, but we could run into those levels before those times, and that would be interesting because it would fulfill the same amount of, because that's one thing about this. Okay, you can see the second point and the third point of the high are a lot different from the second point and the third point on the low. So one thing that it's difficult for it to do is to keep the times in sync. But let me think about this for a second. Put this one here. I'm not. So yeah, it's literally gonna change the times. Keep an eye on those little circles though. After all, it seems to like making that pattern. So, which just to go over, it's very much like a symmetrical triangle that it just manages to get those three tests on either side. That's like what we've been doing, literally what we've been doing. Like I didn't even consider that. I just looked over. I was like, wow, that's the thing I just drew. So this up here too, something very, very similar. Like, what I can take is not that, but just just the whole idea of it being able to that confinement area. And I mean, when it's not moving in the direction of the trend, it seems to be interested in being able to kind of expansion, that same kind of expansion going on down here. And it honestly could have started the day with that too. It's remarkable to me how much this line that originally expanded can actually be part of it. Not quite anymore. More like we're seeing it on the upper side now, which is, not something that we were seeing in the middle. Go check up on Intel, see what's going on there. Nothing. Giant S wave. Okay. We basically have a giant gap right here.
It's got to off at 161 to that WB point in the bottom there.
Yeah, we can put those on. Also, these ones can be applied to. Another third drive playing out in the short term. They're as common as they were on the way down. It's not really uncommon. See that sometimes the trends break and share characteristics with the last ones. I can see that Amazon is trying to push through its 50. 61 could present some difficulty for it. Interesting how Amazon's already at its 188 200, and both of them seem to be struggling at 161s today. I don't mind that it's actually a little bit slower. It makes it harder for people to chase, and I also think that people are trying to short it, and we're gonna gather them all up and try and get them to fill in the gap here. Because if people short it right now, where are they gonna put their stops? Is it likely that they're gonna be in the gap, or are we gonna make them buyers at the 188 200? Comes a question. They're gearing up right now to make sure that everyone becomes a buyer at the high. Short sellers get squeezed. We get the B point up top. It's one way to say, like, all right, let's say for instance, if they've eliminated everyone from the lows and they want to try and find value in in providing making people provide liquidity at the B point, because if they've eliminated everyone, they can't get any kind of liquidity at the B point. So if they convince people to short it beforehand, they'll put buy orders in the B point area, which is perfect for anybody trying to sell there. And I think that that's going to try and rival the POC, or the new POC below the green zone, where we could make a siege node to get back into the range above. So watch out for that. Because like what I can see right now going on with this W is it's like it's played out from the 127 to the B point, then from the 141 to the 127, the 161 to the 141, the 188 maybe to the 161 next. And it's a slow grind, but we do have a new trend now. And it marked the end of the use of the blue line for now. Effectively, in order to test it again, it would have to be an entirely new expansion. But what we've done around this purple bar is quite interesting. We've managed to test it from the underside multiple times just to turn it into support. So they're trying to basically convince everybody to short it so that they can put their stops up here. Because anybody that's accumulated down here wants to take some off up here. Best way to do that is to make some buyers up there. Make it a little bit slow. It's not so bad. It gives them time to drag their stops up into more of a loss. And if it's slow, it lets people short it so that they can also be part of the destruction. That little move that we made was like a egg in the mon kind of move. Because what I see going on in there is very similar to a head and shoulders to an inverse head and shoulders, not gonna lie. In here. Little 5-wave move. Little spike out of the high, matched by spike out of the bottom, separated by consolidation. And really that's what's happening when we do this, right? That can fit over top of this. We can see it happening in here. My trend breaks. Everybody gets stopped out.
See that, John, on the 15-second?
Oh no. Let me look here.
Yeah,
Oh yeah, it came down to it.
yeah. The only other times it came down to it would have been the two spikes on the bottom. But yeah, I just came down for up for points. It also, the 1 minute reached the 15 on the RSI.
Interesting.
So I was using it as resistance and or a support really, and just trying to push it up. Which makes a lot of sense. I mean, we're not even at the 188 yet, so
Nope. And it's the giant B point at the 188 there too. It's never really been tested properly.
if you never got in from the bottom, it never really gave you any opportunities whatsoever to get in going up if you're just looking at the 15-second RSI until this particular moment.
What I am noticing on the 15-second RSI is that there's a standard distance away from the yellow line that it likes to make. And every time it makes that distance away from that yellow line, it gets in serious trouble. Something seems to change. One of the short-term trends. So that's one pattern I'm definitely seeing there. It's
Okay,
like there's a standard amount that it deviates from that yellow line
right.
while it's in this trend.
Hmm.
And it's like whenever we see it stretch away from it, it might be interested in coming back to it. And it seems to be trying to continue with that as it's testing it right now too. It'll go with the 1 minute. Yeah, the 1 minute's still a ways away from the middle. But now we're using the 15-second yellow line as a support. So that's not the green line as a support, but the yellow line. Kind of doing that the hook on it, right? And it's also on the 15-second, it's managed to gyrate twice down, and it is a fifth wave again, but the fifth wave doesn't have to really send it down yet. It can produce a little bit more to get to the B point 188, of course.
That's what I love about the 15-second though. You can see it when it's using it as support, right? The green line.
Yep, but it also used the yellow line, right, as support
Yeah.
recently. Yeah, like on the last minute low, it was the yellow line that it decided to. And it's not as good as the green line, of course. It never can be really, unless it's below the green line, which is hard to really get the yellow line below the green line. Because that's the slow line as I have it. The 70 line.
Yeah, this 15-second RSI on the bottom thing only works when the market's going up. Everything else is just, you have to figure that out on your own. But that's the only way obviously at work here.
Yeah, while it's in a
But it's
trend
just
kind of thing.
indisputable. Yeah, yeah, yeah. It has to be an upward trend. And a lot of times, like, you'll see it though touch earlier than what it did this time. I mean, I think it went up like 60 points before it showed itself again.
So it's really working out here. The fifth wave, like I said, it's been elongated all day today. Amazon's crushed through the 61 to the 241 right now.
Yeah, I've never seen this move not work. Not once. Long day though, just waiting around just for that move. That's all you're gonna take.
Oh, that's not even the half of it, I don't think.
No, I agree.
Take a look at the other chart here. We just come up to that VWAP right there now. So now this movement has formulated to give us this movement. So all the B points are cleared. Now we're left with B points on the other side of the range. You can see it's just coming up into that 78 area with the 261. 78's right there. That's on Amazon. And now we've lifted off the 188,200 and we could be interested in the B point above.
I see it reacted to the 188,200. Maybe even went up to the, no, not quite, just 188,200 short term, but up to the 227 with that larger B point down below that you have there.
Yeah, let me look here. That one there?
Yeah.
The 361 of this one is kind of really important in my opinion. 261's the POC. Is that what you're saying?
Makes sense, right?
Yeah, the 261, it might just get blocked though. Like I mean, we could get stuck to it. You know, kind of hovering around at it. It's like 7 out of every 261 seem to do that. 7 out of 10 are 261s. 70% of them grinding, especially if they're placed in the middle like that. But now the elephant in the room becomes the new support line. Giving me deja vu with that one uh, Amazon earnings report. You know what they did is they had a B point just like this one, and it made the trend, and it was going and everything, and it gets to the level, and then it breaks the trend, and then it was like smash. It's like, oh, you didn't get the exposure. I was like, well, that's a little ridiculous there. Able to do this kind of movement, and especially for it to just basically be a very small distance that's even between the 188 200, and it manages to go so much farther past it and squeeze everyone out just to end up sniping it in the future. Here, I found it. So you can see the 188, and it barely has like a little bit of a play out and doesn't manage to get it. But I'm pretty sure it ended up getting it. Yeah, so let's remember the movements that they had. Um, so what we're doing right now reminds me of what it looked like when it was in this state, and it ended up doing this. So this picture was with this trend, and it only offered like a minimal amount before actually doing this kind of retest. And I'm like, wow, that's a hell of a retest, isn't it? To stretch all the way up to the 261 like that and actually get back inside of the trend just to be like, oh, you didn't get your exposure. It's like very particular, very particular. And at the time, when you look at it, what it would look like at the 161, or sorry, the 188, it looks like it's relatively high and, you know, similar to what we have right now. But no, it really isn't in comparison to what it can do. And what it ended up doing was this. So the market was kind of doing something a little bit different, but it was falling down. We were looking at Amazon uh, and its capability to make a strong reversal. Like it kind of snapped out of the bottom of that triangle and then ended up exploding through the red yellow line. Because it was obvious we were going for the break of the red yellow line. But I was even saying when we were breaking out that there could be a spike out of the bottom of it, and that's the kind of movement. Oh, geez, that looks very much like what we did right here, like a lot, weirdly. And now we're establishing a support on the green zone. It looks like. And it's like on what Amazon did. Do you remember that we saw this pattern a moment before on the market and on Amazon? Basically, something like this kind of movement could be on the table. When we were up in that high, right? And it was exploding, like I was like, all right, back to test the red zone is on the table. The return to the blue line is also in that area. So I'm looking for those two kinds of like pullbacks right there to try and get that. And then we looked at this movement right here coming right back into that red zone, smashing through all those levels. Huge amount of points to be taken on that. And I was like, literally on after that, the idea was Amazon tanked. And this was what happened. So double the current profit of any shorts. That's what it's telling me currently. The 700 point B point is the target for this move. Before we rip to the red zone above on the daily, because we weren't even at the red zone on the daily yet on this. And the idea is the destination does not change, and no point has there been a point to gain exposure to it that is not allowed a profit along with protection. The entirety of the earnings week will be destroyed, and anyone from sellers, people value this green zone and the red zone above. So basically, like, it continued tanking, like, and the market even just got like absolutely slaughtered on the open. So it's like everything from literally trying to fake people out of being in the wrong direction. So like literally, it had everyone fighting and fighting and fighting for a short, right? For a short. And then it literally exploded up. It hit the target, but it exploded up out on the report. And obviously, there was a big dump after that, and it ended up taking all of its earnings back. Yeah, I made a video on the Amazon earnings. This one, that was the another Amazon earnings. I think that's where the yeah, no, that's where the Amazon retest started. That's where I got that beginning movement. Cause I was like what a nasty trend break. That's what unforgiving looks like. Nasdaq did not do this. This is Amazon, right? So now I can see it all over again. Everybody's like, "Oh yeah, the 188. What happened to the people at the 188? It's just absolute trash." I'm like, it's got this written all over it. I'm like, why are we bleeding through the 188 again? Well, I mean, it is like if you look at where it's positioned, it's the green zone. I mean, of all places to be bearish, right? Not to say it can't go down off of a green zone, it barely even got a bit of a grind to it, so it's an interesting situation. But with the VWAP in there, if it falls from the red zone, it may get stuck to the VWAP. After all, it's created a node before it got involved with this red zone, and because this was an entire spike out of the bottom, it's like we've been consolidating, and we've made a pop out of the top and a pop out of the bottom, created a downtrend, we broke that, and now we're effectively in a new trend and it's upwards, erasing the largest part of that move. And I mean, like I say, sideways up and down is a bullish pattern. The biggest part of that pattern is a downwards move, breaks the trend in order to get to the middle, And what are you left with? An uptrend by the end of it all. And whether or not that uptrend is strong is what we're working with now. Is it capable of breaking the entire downtrend? And what's the position worth if it does that? Exactly. So it's pretty straightforward. And the closer we get to the report, like I said, you want to be more and more interested in finding a hedge, but using half or less than the core is a great way to be exposed in both directions, yet you still got more skin in the game towards the upside than the downside. And any downwards movements that there is on the initial uh, report release, you can capture. Even if there's one sooner than the report release, you can take some off there. And if it pops back up again, well, you can hedge it again. But it's good at times like these to make sure that the instruments that you use for hedging are readily available. Now remember, the other indexes aren't going to move the same way as the Nasdaq. They might, but it's not like they have to, because they might have companies of their own that they're interested in moving with. It all depends. Like after all, Amazon's a huge player and it's likely to affect everything. But at the end of the day, you can't assume that it's going to move the SPY or the Dow as well. It is a good chance that it will, though. But it's good to make sure that you have everything readily available so that you're not stumbling over the keyboard when everything needs to be implemented really quickly. It's good to be able to manage your stops effectively, manage your current core position effectively, and be able to manage into any hedges effectively as well. And Amazon chart over here a bit. We can see the 261 on Amazon is right up here. I'm going to go ahead and just mark that because there's like a whole lot going on this chart right now. So we're just going to simplify it a tiny bit. At this point, being the 261 to that green B point down below. Can we have an impact strong enough off of a 261 to get us to the B point? Because it did before. And it treated the 188 like absolute crap. And it is kind of like a 5-wave move, but it's terrible. We can see the same kind of thing going on in the Nasdaq. Ever since it was associated with the range, it's been interested in moving in 5 waves. I can see that the way that it moved to the range is on a 5-wave move. And the way that it moved through the range is on a 5-wave move as well. And it is like pretty darn similar in the time and size of the moves and everything. So I'm like, it was trying very hard to make sure that that was the case. And even on the smaller moves here, we can see that that's been a thing where we try to make a little portion that has 5 waves to it. Now, of course, remember, 3 drives is 5 waves as well. 1, 2, 3, 4, and 5. So it's really common to really get fives going on if it's going to happen in 3 drives, and if it's going to happen in 5-wave moves like Elliott wave moves. We're going to see that. I mean, let's get used to seeing fives everywhere, of course, and threes. Threes like to be associated with fives, sometimes before and after, sometimes before or after. So it's like that's the case. And over the past couple of days, what the market's made clear is just because there's been something that has been effectively working doesn't mean it's going to be the most effective thing in the future. Like it doesn't mean that just because there is a way in this trend, 3 drives in this trend, it doesn't mean that that 3 drives that's so effective while this trend is in play, it doesn't have to be the reason for the trend to end. And it can fail when the trend ends too. So like that's another thing as well. Is like we did 3 consecutive highs here, but look at where they were positioned. Undeniably at the bottom of a giant downtrend. Is this an effective place to have a 3 drives pattern? No, 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 no. But if we did the same pattern in this red zone, well, in this red zone, do you think it would be effective? It could be, yeah. Especially if we don't slow down at all at this VWAP, it'll have hell to pay. You know what I mean? So that's the idea. And I mean, it's not like the what's it called, Amazon isn't at the 261 too. It is. They're both at a 261, and whoop, they've both ran up to this point very aggressively, and nobody's getting nothing off the 261 yet. I mean, for both of them, they've been very slow approaches, just allowing everyone to short it, I guess. That's suspicious to me, and I don't like it one bit. Usually when something is bearish and it's fearful, people are slamming the sell now and it moves fast and hard. This is like the slow grind that's just painful to anybody. I'm like and at the end of the day, it's right in the middle. If it's in the purple zone, I mean, it's nowhere near as good as it's ever been in the green or the red zone. And it's not like we're never going to see the green or the red zone again, so why settle for the middle? That's one really good way to look at it, to be honest, in a logical way. It's hard for me to argue that now that I try to. It's very hard. Because it's not like we're not going to see the red or the green zone again, And if you think about it, why is the middle good enough for you if you know we're going to see the red zone and green zone again, right? It's interesting. I'm like, what confluence is there in the red zone and the green zone if it is oh so good then? Well, I'll tell you one thing, there is the downtrend, and this could be tested from the other side, but off of what? Something the same distance that we use below, maybe? I mean, are we doing that right now? It is very similar, but it's not quite exact. And I can see we're running out of volume there. Where's the 61 of the entire dump? Are we there yet? 50% maybe? Because I'm like, it's not like the 50 hasn't been common. I can see there's a 50 right in there, right there. So right at our 241, there's a 50 right at the VWAP half. But this has got squeeze written all over it, in my opinion. So let's be really careful hedging environment. But I'll tell you one thing. This relationship that we've got here with the 261, it's going to have to come to an end in maybe what? Yeah, I mean, 10 minutes spot tops or something like that. And it's like it looks like it's fighting with every bit of its might to not do it. And it just paused for everyone to short it, and everyone that did short it is inevitably buying in the red zone now, which is terrible, right? Because if you get stopped out having shorted it, you're a buyer in the red zone. I mean, who's that good for? Somebody that's caught it below and wants to take some off in the red zone. I mean, what a better place to do it than to convince people to short at the 261 and then stop them out to provide liquidity. And it's illegal to do that, but they get away with it because nobody knows. Just think it's other individuals battling against them. But it looks like we're if we could grind as much as we did the green zone on the red zone here too, and that would get us to the imbalance. That blue marker that is the vertical dash line, the blue one, we want to make sure we're very much aware of the implications that could create volatility, and everything from after that point could be a little bit different because people got to have a little bit of they got to have guts to trade in that period. Like a lot of the trades that happen from that point on are going to be committing to the earnings report. And a lot of them are going to be, they're either fully committing or fully exiting. Usually they're like options traders and stuff are going to be interested in grabbing their trades. Because like look at it for instance, if you bought an options contract at the beginning of the day, I don't care if it was a call or a put, you would have been better off getting that exposure here because it's worth less than it was here. It's decayed after all this giant movement. It's not as attractive. At least there's a chance that many of them have decayed, and it's not cool. And I mean, after all that grind on the 261, we can test it from the other side. It's appropriate to test it from the other side. Every little bit of the blast that there was beyond the 261 can be taken back, but we might just come back to just the 261 because it's like a taunting move. It's like anybody that, has been holding the 261 and sweating buckets over it, they get their entry back sometimes. And I'm like, that's if they're nice about it. And I'm like, oh, geez, these people right now, I think they're in the business of being in complete control. I don't think they want to be nice. We gotta be careful. And they're clearly long again. All right, so we got that sorted out. And also, we got to watch out for it to come back to the 261 again. So no stops are to be dragged above that 261. You know what's funny is the 261 was the thing that gave the people at the 188 relief before. Now it's a channel that nobody's really even seen work yet. Nobody even knows it's really a channel unless they were trading the pre-market session or analyzing that pre-market session. And you want to know what's funny? Is everything that's necessary in this area is on data that's otherwise chopped up to crap on QQQ and every other stock that there is. Because that area where this vital channel began is this for them. So what are they going to find? A lot of value on that, drawing a red zone and a green zone below it when it doesn't even look like it was actual trading. And for some people, it won't even be on there. So I'm like, oh yeah, very much like them to use the things that aren't available to the public against the public. So now here we are coming back to the 261. Very, 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 very accurately. Both of them are doing it. We've got Nasdaq and Amazon both interested in making this distance. Boiling here now too. Can't believe it. Too too much.
Were you at in the city or?
Mhm.
Yeah, it's not boiling here. It's like minus 10 here in southern Alberta.
Oh yeah.
Frozen tundra. Sucks.
-10 you say, eh? Holy smokes.
Yeah.
That's crazy. Yeah, when people think of Canada, they always think of something like that where it's always cold and stuff, and I mean, I'm not even used to that anymore.
Well,
When
you're
we get,
southern Ontario, that's why.
yeah, I know, but it's supposed to be all 4 seasons.
Yeah, you just don't have the harsh cold winters that we have out here. They're worse.
Mhm. Well, for now, till it all melts away. Global warming. So the red zone with absolute precision off the green zone. I think we could get a test similar to what we did on the green zone, but at the red zone as well. The VWAP is something of very high interest as well. We had that from the beginning of our first expansion at the very, very, very beginning of this. So that VWAP is, it's a good spot for the inbounds, not gonna lie, right in the middle of that range. They constructed it today, and it's so everyone can be inside of it, and so that when the report hits, they can add volume to one of the extremes and potentially keep it into the range. A little late on that one. They're like, how it could bounce back. Oh, they want people to buy it already up here? It's ridiculous. Oh, yep, thanks. The imbalance is coming up, and it's like appropriate distance. Exactly at the close, we have the reports coming out. Intel. I mean, if something was seriously wrong with Intel, I mean, do they like not have just as much money as Nvidia? Like, they not hold as much market share? Like, have they not been around? They could move the market if something was wrong with them. If it was enough of a surprise, but I mean, they've been treated like crap. They could bounce back hard in the future though, because they're a huge company and just need a little bit of a change. I mean, if they put all of the money that they had towards doing the things that their competitors did, they might be able to turn it around. I don't know, but at the end of the day, they're still the best at something. I would like to think. I'm not sure what that thing is, but that
Best at x86 framework, and
there,
that's a big
there you
news
go,
today.
there you go. Yeah, I knew you would
Yeah,
know.
I mean that was big news. AMD and Nvidia saying they're going to directly challenge Intel's PC market. It's a big deal.
And that's what happened yesterday.
It got talked about yesterday, and I think
Mm,
there's yeah. I don't know. This all might be pre-earnings stuff, like you were saying, but yeah, that was pretty big news to me.
mm-hmm. Yeah. Oh, yeah. And you know another thing as well is I know it sounds strange, but another company like AMD or Nvidia could actually move heavily. Like this earnings will affect the market, and the market can affect, you know, Nvidia or another company as well. But also they're in the same kind of sector, and especially if their news is connected, it directly affects Nvidia as well. I would like to think so. People can look at it as an excuse to trade Nvidia, depending on how they did that. Somebody's definitely going to. So we might see a little bit of movement in the rest of that sector, even because Intel's actually a decent player.
Intel's good. Yeah, they're good. They'll be fine. The other one to look at is SMCI. They
Are they doing
are
a earnings day?
they're the no, but they're running exactly the same. They match
Oh,
Nvidia.
in their company,
Yeah.
in what they do.
Well, they build the
Shit.
machines to test the cards. Uh,
Nvidia
the one in the
or
Netherlands, ASML, makes the machines to make the cards, so they're directly connected to the business.
yeah, I see Intel's kind of been beaten down brutally, and the rest of the sector isn't down. Like even Micron, like they've managed to hold in there kind of.
Good old Micron. They just bought somebody. They just bought some little RF. I think they bought Wolfspeed's RF business recently, radio
Yeah.
frequency. They're making money on drones.
Yeah, I used to trade Micron like every single day. It used to be one of my favorites. They move pretty decently when they get moving. Today's kind of an eventful day for them because of Intel.
Yeah, they're a good company, and all told too. So they've got a lot of money.
Yeah. Oh, here's that like fake break thing going on Amazon, and I wonder if we're gonna be able to grab some of these B points down here before we end up back at that VWAP up there. It looks like we've with precision managed to go the green zone to the red zone, or sorry, back and forth from the red zone to the. And I mean, Amazon's done all of absolutely nothing while it's done that. It's absolutely remarkable, actually, how it's managed to move this much. And I'm like, I don't recall seeing Intel. Oh yeah, yeah, it is moving with the market. It's not it's not moving exactly the same way, but it's kind of like picking up in its ability to be able to move now that it's getting closer to the report time. Some of the hype might be coming in.
Yeah, I need AMD to start doing a little better. I bought a little high on that one. We'll see. That was weeks ago though.
Okay, AMD has come back to do a lot of what they should have done though, so that's good. Like these are all short-term targets, I'll take them off, but these targets right here are good that they've hit. That one's not quite hit, but I can see something that we've seen all day today, and that's like these 3 consecutive lows. And what's interesting about that is since it made the third low, it's had no interest in coming back to that point right there. So I do think that that's something that could actually we could see that. I'm interested in $100, which is, I mean, I guess that's a pretty standard level. And now that I look at the price, it's $100 is I think it's incredibly likely that we end up seeing that again.
We'll see 110 again. It's just going to be next month.
Yeah, yeah, I think you'll see 110 again, but I'm like, if it was, if it was like from a fresh perspective, it's like that would be first profit target before you try and get in for the trend break. Like the trend break is what'll get you. I think it'll be more than 110 actually, but 110 is good because it's the high of the node here, and I think that when we actually try to get to that point, there's a good chance that it actually tries to double that and get into a secondary high where it's actually going to be a little bit of a problem when it gets to the secondary high, but that's fine. That'll be like around 130 again.
Yeah, AMD is trying to find their space in the AI market, and they're spread unlike Nvidia. They make CPUs and video cards and financial processing. They make like 5 different products really, and so they've got quite a bit more what do you call it, diversity in their market than Nvidia does.
Yeah. I think that it's actually interested in making a W to go along with the M. Like something that we saw very similarly today was this movement right here out of the bottom. I think it's very subject to being able to happen out of the other side on AMD. Um, and I wouldn't be surprised if it just tried to reach down and just grab that stupid B point in there because it's been doing that on the 1 minute of the Nasdaq a lot. And I wouldn't be surprised for such a predominant tech company to share characteristics with its index, the Nasdaq, which is the tech index, and yeah, like this pattern right here. This is what we saw today, literally, like at 2:34. I was pointing out this kind of movement, and we had like yellow line and a yellow line, and like this move right here seemed to generate out of that side over here. If I take these lines off here, you can really see that that middle area kind of duplicating the move that brought it into the blue area, left the blue area as well. And I mean, when this pattern happens, it's kind of ridiculous for it to do that. It's really not going anywhere when it's doing it. Like, but to be in from down here and get that movement would be ideal. Like in today's uh picture, we wanted to see it do that. And I mean, it would be going from a W, or sorry, an M into a W as well. So it loves doing that as well. And when I take this apart and I'm like, all right, this movement right here, it undeniably is 1, 2, 3, 4, and 5. So if I look at this, it's also got a 5 wave. It's on its 5th wave basically. So I'm like, I like that about it. Now the thing that's interesting about it too is it could make an inverse head and shoulders because after we make a 5 wave move, we could make a 3 wave move, and that could look like testing the and continuing. It could look pretty weird, but I think this kind of pattern overall is something to expect on AMD.
I
Yeah,
agree. I think the news that AMD is going to use ARM architecture for going forward for a lot of stuff is good news, and also good news for ARM, who owns the proprietary architecture.
I'll take a look at it.
ARM went public public again. They went private and then public again after a few years. They sold to a Japanese bank and Bancorp. I don't whichever one. And they just went public again like 3 or 4 months ago. So it looks like they're down, but really I think it's at their price.
ARM. Oh,
Yeah,
wow. Yeah, there's not much data there to work with, but
there isn't. So IPO, and then you see the sell off, and then it stabilized. I think we're getting to a stable point, and then the secondary markets finally got their hands on ARM stock now that all the IPO people started selling. So
yeah, I just wanted to like look at this for a second as well because I'm like, well, hold on. I'm like, is there maybe a way that it's doing this? Could be as
these
well.
guys are the future. So keep an eye on them. And they don't make anything. They just design chips. They sell architecture for the big chip manufacturers. Oh, looky there.
It's trying. I mean, what the hell's going on here? But yeah, it really did do a lot of this. And this spring, it's like, yeah, it's springing all right. It's literally like the spike. It's kind of got like an inverse head and shoulders going on there. To be honest, I'm bullish on this company. I like, from a technical perspective, I think it's going to try in its own weird way to take this channel like it does in the schematic and double it. And it's going to
I
try
think
it.
so.
I think it's going to try and do that here too. Uh, like double it kind of thing. So like,
There's a lot of people watching them right now, so I think people are trying to find that nice buy-in for the long, because the long you're looking at 2 or 3 years. Just hold on to them; they're going to do great.
yeah, like I like the idea of it getting to 60 here though as well. But I mean, like I just looked at the price. I'm like 50 to
That's
60.
short term.
I'm like, what the hell, 50 to 60? I'm like, that's nothing. But yeah, no, it'll do it. I think 50 to 60. Yeah, might not stay there for too long initially, but then when it pulls back, it can continue even harder. But I do like the idea of it being able to double that range.
So these folks, Nvidia, AMD, they're trying to upset the PC computing market right now. So they're going to act funny for the next year anyway. So we'll see. They might fail miserably and lose a bunch of value. We'll I don't know.
Yeah, yeah, it's possible. Like, from a technical perspective, they could do quite well.
Head and shoulders.
On the short term, yeah, I see that.
Yeah, yeah. Yep.
So Amazon pulled back to its 200 from its 261, and Nasdaq did something similar. But I think it's interested in getting to these B points that it has up here too. Gotta watch out. And that same blue line, I think that it exists on the Nasdaq too in a strange way, but it's not as visible as it would be on Amazon. It's quite an insignificant kind of test, but I do think that maybe the VWAP could be involved, the Nasdaq's trend. To be honest, look this angle here.
Every WAP's right on the very top there where it peaked out.
For you? Yeah, I got the
Yeah,
VWAP.
just the start of the red zone there.
I think I have one up there too on the other chart there. So look.
Yeah, same deal.
Yeah, the Amazon's trying to get through that line right there. And if we go on the other chart here, yeah, Nasdaq is also trying to wait. If it makes a head and shoulders and fails it, could form a W. Because at the end of the day, what we have here could be very similar to a Wyckoff, to be honest, if we do this. And I mean, getting that pattern out of this, this area right here can look like a head and shoulders. But it can still fail and then continue doing a Wyckoff. So I'm curious if we're going to see that, as it's in an appropriate area for it to consolidate for the imbalance coming up not too long from now. As you can see, the blue. Not much time for patterns to form in there, but there's time for it to rival any hedges made prior to the report.
Yeah, I noticed how the 15-minute didn't go all the way up to the top there of the red on the RSI.
Oh, on the 15-minute?
Yeah, 15-minute. Yeah.
Like it still has room to go. Well, I think that if we end up coming back to the VWAP before the imbalance, this blue line can end up back at the 15. It'll look so centralized and middle. Nobody will be thinking that there's any kind of, divergence or
It's
anything.
a crappy place to enter any trades or anything like that. It's not.
Yeah, it's perfect for the imbalance though. I mean, centralizing it with an equal spike on the top and bottom, just pretty much keeping it right in the in the middle of the range.
Well, for sure. Yeah.
I can see it's right. Like if anybody did have control of the market and they did have assets, it would be a really smart play to keep everyone in the middle and keep them indecisive so they don't group together and get in based
We're
off
still
of.
got. I mean, we're coming off at 261, right? So it makes sense we go down to that B point.
Yeah, we could, yeah. Yeah, the B point really was an interesting one because like I said when we were making it, it was like it made the B point, came up to the 127, came down, and then the 141, and then came to the 127. 161 came to the 141. And then it skipped one and decided to go 227 down to the 188. And it seems to be like making these steps, but from the very beginning, the 127 to 100, it considered that played out, and then it basically built off of that and did the 141 to the 127, and then carried on with that. And then eventually, when we blasted out, I see this very frequently that on top of the slow grind, we blast out, take back all of the blast, and it expects people to be in from where it was unattractive. And everybody that got excited about the big blast seems to be part of the retracement. And it seems to be, you know, pretty appropriate when we make a Wyckoff, doing the phase A really solidifies the range. And if we were to do this, just the phase A part where we have the PSY and it runs in up and then comes back down. That's what we're where we're at now. If we ran back up again to do a secondary test, then we're already like really identifying the resistance and support lines. Like we're starting the process of being able to use this area basically is what that's saying. The resistance lines and the support lines are getting their construction inside of this uh, area. So I think it's really important in that area. Phase B, it can have a mind of its own sometimes, but at the very least, what we like to do is create the confines for where it can start consolidating by doing this. And ironically, we're already in a range that has been used as a consolidation where if we look at all the volume that's in that area, like before it disappears, it's literally concentrated inside of the area that we have here. If anything, it could use a little bit more volume on the green zone because we didn't grind it before we came through it. And that's one major problem usually. Like, I mean, I guess you could call it a little bit of a grind here, you know? And when I look at this, it's very interesting to see that there was an S wave around the green zone's low, and then it carried on, like this movement here, a cap wave. So if it is to be doing the phase A, could it be interested in breaking this line? We're at the 161. I could put some regular fibs on there too. We're seeing that's the 50, the next fib coming up. So this is the 50. I'm going to take this view up from before. I'm just going to put it beginning of this. Check out. So we're at the extreme of the green zone. Before, when we were in the green zone, the red zone, it was capable of making wicks and spikes outside of the range that were quite similar in size and time. What we have now is a very similar version of what we did when we were in this range here. We started out with a distinctive move, went above it, and then came down to meet the middle area where it had a minor consolidation that continued down below it, roughly the same distance on either side. I cannot help but notice. And in the same way that we may be doing that, we might be interested in testing that middle area at some point again. Now, of course, in order to do that, the trend will have to break. It's a little feisty about it originally. The next fib is the 61. We do have a B point that remains untested just below it. Also, there's a blue line. A blue line that's, I would say, relatively significant.
I got to come on 61, 361 short term.
361? Yeah.
Yeah, and the blue line.
Take a look at Amazon. It's not quite at the same level. When we're hitting this, I can see that there's a gap between where Amazon's B point is and where it currently is sitting. Gotta watch out for that to have some sort of impact on its ability to profit taken at the B point on the Nasdaq for any hedges, definitely. See that the impact of hitting the B point was to bounce off. We may see it again, of course. 61 though, it's making it clear that everything was bought back up to the 61 times now. So we're at the gap on Amazon. The other side of the gap, there's the B point. Technically, there's another untested B point on the Nasdaq a little bit lower.
Points hit, so
What's up?
saying the B point down there is hit because it went up to the 261 to that B point down below.
Yeah, there is another one there that's smaller at the 74. And Amazon missed its B point, so I was like wondering about whether or not we could make a leap for another B point as Amazon still has yet to hit. Being affected by the gap right now. It's wicks and spikes into that gap on Amazon. Amazon still has yet to hit the B point. Gap somewhat filling in. Remember, Amazon will have an imbalance of its own, and it doesn't have to move with the markets, but it can. The imbalance is coming in. Yeah, getting it back into the middle would be pretty normal. Thing is if we make the same kind of movement, making as a second wave, it could make a fourth wave and fifth wave before returning back to the middle. Turning back to the middle regardless on the table.
Sorry if I was keying up there. I was typing and had my volume down.
No worries.
What do you think about Oracle? I think I've got everything showing they're going to probably keep going down over the next week. I know
Well,
it's long term, but
they could be affected by the earnings as well, but let's take a look.
thank you. Trying to find a place to buy in long with these guys because I believe in Oracle as far as like their capabilities to be a good company.
Yeah, they could have like a 61% retracement potentially, like a 61 of this entire move right here. They're at a 41 right now. The 50's pretty important. To, it it is relatively high though. That's the one thing about it. There's a few things that could form out of this that could send it pretty sideways. What do you think that their technology is gonna create volatility for them? You think they're gonna become more on the table for people to trade? Like, because it seems like they're kind of like fading out with their ability to make strong moves and stuff like that.
Well, yeah, you might be right there. They're big, as far as like the secondary and tertiary AI market, I know these guys took a big bump, but they're losing it right now. But I think they can stay up there once the technology fully develops. We're talking 2025, but you got to get in
Okay,
now, right?
interesting. Yeah, and when it
While the
releases,
bear.
then a lot of the companies will, or a lot of the people will start trading it, and it'll likely become more volatile. And I just think that right now it's kind of destined for centralized middle area. I don't like what the
Okay,
Nasdaq is doing on the short term, but more long term with Oracle. But they might
I
dip
bet you're right there.
past the middle, and that's when it could become interesting. Or if something stupid happens to them that's not really a big deal or something like that, like something that's fixable and it scares them initially and doesn't really mean anything. There's a lot of that can happen, and it can affect the price, and you know that can actually be good times to pick it up, especially if it's moving down on that news that doesn't really affect it in the long term, and then people will see after the news is dissipated and it's down.
Yeah,
It's value in that environment, but
definitely get all the way to 90, and that's a good value to hold on to it for a while, in my opinion.
yeah, 90. Yeah, okay, that's right above the 61 there. So right in that area. Yeah, it's like 86 is the 61. That's
Okay.
right up in there.
And I think, if we're talking, a year and a half from now, what's going on with Oracle, I think they'll be up from there. So
Mhm.
that's just my long-term mind coming into play here.
Yeah, yeah. They when they get going, they can be pretty they can move pretty hard. So an appropriate place for them to get going from could be the 61. Like if I look back over here, um they they used a 61 in the past. It looks like that 61 was one of the major turning points for the last reversal there. So if it repeated that, I mean, it could it would be like exactly the same move, which is kind of interesting. I wonder though. It's kind of intriguing.
You make this look so easy. I really need to sit down with you this weekend and or catch you sometime and like work with me on these tools here because that you're making it look easy.
Yeah, man, for sure we can. The more I dig at it, like I don't know anything until I turn the chart on and I start picking away at it, and it's like all of the tools that I see that I can use, I start to apply them, and I see what it gives me, and I like to find out new things, especially when the market continuously brings in new patterns and new environments and different events that can make the market move in certain ways for certain periods of the day. And I've come to notice that it's completely different in the later half of the day. You can see these huge moves coming back and playing out to B points and trend breaks, breaking pretty flawlessly, and not many like squeezes or anything like that. Like, I guess you could say there was some short squeezing in here, but everything's so precise that it's very strange how, we can use the support the green zone as absolute precision for a large move, and then come in and use the red zone as absolute precision for a large move. And yeah, this movement right here that we're having right now actually might be very similar to what we're trying to do right now too. That's another thing. Yeah. And I can see in this case, you can see it was kind of nasty about the 61. It was like, oh, it'll show everyone the 61 working a few times, right? And then every now and again, it'll do something like this where it shoots right beneath it and it comes back just to give them their average price. And I see that a lot when a lot of people go for a particular level. I think this is how it tries to respond at that level. And it's typically after it's been shown working a few times that when it really counts, it'll do something different. And in this environment, it's the 61 is actually, it's like lower middle range. Like, it's not too far off of the exact middle as well. So it's really easy for the 61 to end up making it seem like it's relatively centralized. But in this case, both of them, Amazon and the Nasdaq, are somewhat associated with their 61s. Like, you can see that Amazon has come down roughly to that 61, and Nasdaq is also trying to deal with that 61. So it's kind of intriguing. It makes me wonder if it wants to do a 61 of this move here.
It wasn't a 61, John,
Hmm?
at the peak. At the peak there, that was 61 of the overall move today. Went up
uh,
like
at the
62%.
at the top
Yeah,
here.
right there. Yeah,
Interesting.
yeah. I went in the hourly and had a look at that.
Yeah, on this dump right here.
Yeah, yeah. That VWAP I had, yeah, it was right at that 61. We started that little VWAP there at consolidation yesterday, around 3 o'clock or something like that. Little consolidation before it dumped and closed.
Yeah. I wonder if it's gonna make a 61 going up now too. Because if it's it could be interested in that.
The hourly looks a little bearish with may come down to 188.200 before it goes up again.
Oh, I mean, Amazon on that one. But
Oh, okay.
let's take a look at the Nasdaq, because Amazon's doing something completely different, and it's like, wait, we got like 20 seconds before it comes out here, so it's like all stops must be made profitable, and like it's very important to make sure everything's safe at this point, because we're gonna get some heavy movement here. It looks like. This is the trend, the elephant in the room right now. The first move doesn't have to be the last either. Typically isn't. So beware of that. It tries to get people to fully commit to a move that's in the wrong direction usually, so be careful with that. It's the way of the earnings in 2023, which is brutal, but like whatever that just happened right there, that's not the report. That's a fake out. Gotta be careful with that. But it totally did blow through everything. Looking pretty good there. That's the first initial move. Any long stops should be placed at a profit. You want to make sure that you're this line right here. It's a very intriguing line now. Coming back to test it from the other side is something of an interest. Deja vu on the other one. Just came down to smash that level. Like that. Nasdaq is trying to play along, but it's kind of just in the middle of it all. Intel? Intel hasn't made its move yet. So close to that 261 up top there too. I think coming back to test this bar is going to be on the table. Like that. We'll see it again too. So it just smashed it again. It's like smashing it a few times.
Yeah, I think the earnings report was good for Nasdaq, for Amazon.
Hmm. Surprised it didn't move the market as much. But what it did do is this move right here. Exactly. As it was supposed to. Oh, very strange enough, it did do that move. Could have demanded more of it. But here's that level. So it's coming down to test that blue bar. Undeniably. Intel's still not moving. That's interesting. The market still awaits Intel. And I'm like, you know what? I just put in analysis on Amazon right before, and I was like, okay, well, this one, level right here, it ended up blowing um, off of the 61. It ended up going, taking this move and this move here, and doing a 261 of both of them. Or, oops. So That's like seeing this move up here. In the equivalent movement. Sun's coming back to Earth. Almost a 261 of the entire move there. There is some untested B points, of course. As for points or percent, it moves 7% on Amazon so far. Very likely that it ends up right back where it started, to be honest, by the end of it all. The hype is still there though, and the Nasdaq is still retesting. It could catch up a little bit with the with Amazon. I could see it not moving until it makes a little bit more of a consolidation at the high on Amazon. But when the Nasdaq moves, it doesn't actually have to move Amazon as much. Shall see. I remember yesterday it was the moment that the individuals on the whole can't really trade. But we were looking at this level earlier. Well, so it's not the only way that it can test it from the upper side. You notice that we came back beneath and tested it from the underside like that. So like it started out by lunging past it, testing it from above, and then taking that same motion that we did below and doing it on the underside. Notice that the Nasdaq's running and Amazon not running. Intel pulling through. Positive earnings on Intel. Let's check out what's going on. AMD, they moved too. Yeah, they're feeling it. NVDA. No, they're not feeling it, but they might. I think they just have crappy after hours movement. Intel's taking the torch for the important moment here. It's all about how high, how good is Intel at this report. You know, they've blown through like literally every single fib that Amazon hit. Like Intel's better at doing it apparently. Because we've crushed every 261 except for this one. This one is a 261 right now on Intel. That's a little bit of a problem. Okay, so Intel gonna come back probably to test that line in the future, but it doesn't have to be quick about it. It could grind to it. I'd like to see it try and test. Maybe get back to test this level here, the 261, the 188. So basically, like the hedge zone would be for here on them. And like the 261 down to that blue zone is definitely something on the table. And it could look like a third drive playing out here. And I mean, like, where did we see that before? At the beginning of this run. And where did we pull back to? We went 1, 2, and 3, right? And that was a bearish pattern, apparently. And it blew out of it, right? Well, where did we come back to? Anybody that didn't find value in before it started blowing up, they were wiped out. But anybody that had the trade prior to it decided to hold. It was tested, with their integrity. They could afford to lose the exciting pop, and you still have a position. It's like market likes that. Intel making the move back to the level. Watch out. Straight back down to those levels as well. We got to watch out for that. The Nasdaq might not care. Amazon's still just chilling as we're running up on Nasdaq. Where's it getting the juice from? It ain't these companies. It wants to make sure all the companies are out of the way and they're good to go before it commits. Or it looks like, or it feels like an idiot kind of moving if these companies aren't going to really hold, because the Nasdaq doesn't want to be put through hoops like that, and we all know that it's not really something that will move like we saw Meta move like this, and just essentially give up so much that it's taken back just because of one company's earnings report. Kind of doesn't fit. Oh yeah, Intel should be coming down to test its level at any time now. And when we do that, we could test this blue line from the upper side on the Nasdaq index. One more minute till the ordinary people can't trade anymore. See how it responds. If it wakes up like it did the last time it did a 3 drives pattern, because watch, last time we did 1, 2, and 3, it was like pause, 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 boom. Took this entire area that was associated with it, like doubled it. Did it do the same? That's the question. Certainly means that no stops are safe above this point right here. It's like the first of the 3 highs. Got Amazon. Almost at the end of their triangle. But I see a trend on the Nasdaq to push with these guys could get to the 61 of the entire move. But all of the move that we do on top of this level is likely to be taken back. just like it was on top of the third drive here. Like we went 1, 2, 3, and all of that move literally, and some, literally back to what? The first of the three. Are you kidding me? That's interesting. It went back to the first of the three, but certainly didn't play out there initially. It failed, only to come all the way back from the red zone. And what we saw last time we exited this range, we took this entire area and we put it on the bottom with near absolute precision. You know, save that little bit of movement at the bottom. Now it's a fact that we've done this movement. Is it to be on the other side of the channel? It's an interesting point because I mean everything that we've ever done since we've been in this channel has only ever come back to it and made it even on both sides. And I can't help but notice that now we have two major lows here. In the event that we cross this high and try to make that spike out the other side, these B points, or this B point right here, will effectively be in play. And having a little bit of a spike on the top of the red zone that comes back to the green zone is not particularly that bad of a thing. But check out these other companies here. Intel making its move still back to the blue bar again. See, it runs out of volume at that point right there, so it's kind of an intriguing level. Nasdaq's not really moving with anything. The Amazon looks like it's going to try and break the trend. And that crappy yellow downtrend that we have on Amazon, it is still here on the Nasdaq. I think it's I feel it. Maybe not too much, of course, but looks like that's going to be pretty much it for the major movements. This is the move that could actually come down to the blue bar, and when it does, there's a chance that it makes a secondary high. And the secondary high is not a good thing for it because it can come down to this blue line right after. That's something to watch out for. That blue line is very likely to get hit on Intel there. Nasdaq finds it difficult to. But yeah, if there's any more movements, I'll keep you guys posted. Pretty much, this is all we're getting for Amazon movements here. It looks like, and Intel movements. Tomorrow it doesn't really have anything to be anticipate like make any anticipation moves for, so we might see it act a little differently. It might be interested in leaving the range altogether without anything, risky obstructing it, or people might feel that they can, make positions without this like overwhelming risk being part of it. And not having an incredible move looks like a pretty like a good job done for the institutions. If they didn't allow the people to really have much volatility on the market overall, that's not a bad thing. It kind of stayed centralized. It's not good for day trading, but good for long-term holding and stuff. But with that being said, hopefully you guys had a wonderful day, and I'll catch you guys later.
That's good, John. Appreciate it.
Yeah, anytime. Take it easy.
Take care, guys.